All right. Well, let's see if we make a higher push here this morning. If we do not, we may be stuck till Monday. And I don't even know now. It's China. Excusez-moi. Apologies for that. No. Whatever. Everything's gonna blow up. Halts are not good though. I don't like them. All right, let's take a look here. All right, definitely came over the top on Tesla. Let's see if we get anything like that on SPY. I'm not seeing it right now. I don't know. Secondary move after coming low. Yeah, I'm not sure I like that. Doesn't look good. Tesla looks really different in some ways than SPY this morning. A lot of ways. I don't like this on AMC yesterday. This is pretty ugly right here. I was looking backwards and I was like, you know, kind of wasn't really standing on. I'm just surprised. I mean, I can't imagine this is enough of a short squeeze. I mean, the market even called it a short squeeze, which is fine. I mean, it would have been, but it's just not enough. Like, aside from a few people who like maybe got in, you're not making a lot of money on this right now. It's not like you're dumping everything. I don't know. Maybe there's still just too much fear. You're just going to have a lot of control from your option sellers if there's a lot of fear. So it is what it is. Hey, good morning. Well, here's the deal. The way that SPY is set up, because of the lack of that push yesterday, we never pushed above 532. It leaves a lot open for interpretation and to the end of the day today. And it's entirely possible that we do make a push and still don't really advance today and wait till Monday. So I'm not going to hold my breath, even though I was thinking it would be really bullish, even if it had a backup. I mean, I was expecting it to back up. That's not even a question in my mind. Knew it would probably come back down. And we called out a couple targets yesterday. It ended up predominantly like kind of hitting on that 618, which is this region around 517. And that was hit like a few times. You know, this could easily be interpreted as distributive because of the nature of this backup here. It has to jump a creek and hold it in order to kind of avoid a fallout, because the way that this set up has like a built-in, it's not like a weakness in the traditional sense of like it made a lower low on some bigger picture and or it broke some massive trend. I mean, it didn't, but this is one of those things that's clearly sending some kind of a bear signal, and I don't think that it was avoidable, because when we came up, there was no way that we didn't check the moving averages at all when we pushed back over 520. We kind of saw this market wide. AMC and GME are in weirdly different positions. But that same backup right here, you can see like near the end of the day, I called it a potential SOW here on the S&P 500. If you look at AMC, it's much more pronounced. There's a very clear, in my opinion, it's like very, very clear drop of two different creeks right here. That's a pretty massive liquidity test, and that's a big backup as well. So, from the top, are we really in a bad spot where it couldn't possibly recover or something? No, of course not. That doesn't make any sense. Like, this is a push up. If it distributed here, it's more than likely to come back down to below 277 or thereabouts, because if you can't find the liquidity to move forward and advance, you've already traded this region right here at 285. So you're likely going to drop all the way back down through the range. And that to me would be coming back below 280. So there is a bit of risk here, because without any kind of short-term support on this build out, you're going to run the risk of dropping. And we've talked about M crosses and stuff like that. And I know that there's a lot of different ways that I've kind of relayed that information of what I think that information is the best way to relay it to you all. I do believe that on the whole, it's quite simple. Every single M cross, as we call it, is either going to be an S curve of sorts. Doesn't have to be perfect 50-50. There can be shallow S curves to the upside that just don't go another 50% or 100%, if you want to call the first part 100%. But it's pretty straightforward. I mean, you almost always have one or the other, right? And it's not like very complex. So in that way. So like if the M cross does break out, this should be like a 1-2, and you should have a 3, and then a 4 should just break out. It would come over the top and hold, but it would then just go. It's pretty straightforward. I've got a lot of different kind of zigzags on this chart, so let me kind of clean it up a bit. This is the idea right here, but just moved over, okay? So I'm just going to scooch it over. But you would have to see this break to the upside, so it has to hold strength here and go. This is a very evident SOW in that there wasn't really any real reason. And you might say, well, it could have been a spring. Yeah, but a spring can go down and be a local spring and check like a recent breakout without punching through like every available trend, So there's definitely nothing wrong with looking at this and saying, I think it could be very bearish because of that. I mean, it is what it is. Does that mean it's going to go down indefinitely? No. Does that mean it has to go down indefinitely? No, but you have a problem again of, what's the deal? Like, why not just hold it? I don't know. Good question. Part of this might be, again, like a future target that we just don't see yet. It doesn't always have to be now. But I think this is really important when you see stuff like this. You're like, well, if it's just a bear trap, then it's just a bear trap. Again, I've not really seen a lot of that on AMC that hasn't followed through at some point. That particular marker wouldn't follow through would be really bizarre to me. So with every M shape, you have the possibility that there's going to be a, what we would call a S curve And again, in most cases, it's going to be pretty straightforward. Like you would have like a second M shape, and then it would break out, from whatever top, and that would be it. So that would be like the last part of that wave. And it could be quite fast, or it could be a little bit symmetrical. And then the last bit of this would be, where's the middle? And this is a little bit trickier because, again, you're sort of, I guess you're left on a little bit of a subjective note. I think where we are right now would be considered like the middle. And I have already done this measurement from the lower portion here back on Monday. But even just doing it from this point forward, I think you'd want to kind of drop that down. This is pretty close to where the middle is. So I don't think we're going to exceed, and I kind of got the same measurements yesterday. Even though there were anchors that were higher, I wasn't really seeing a lot of evidence that you would necessarily exceed 321. And if it were to go, that would be like a squeeze moment, because I think right now the bears have a little bit of an edge. There's still a lot of fear in the market. There's a lot of uncertainty about China. And yesterday was kind of evidence of that. There was a huge struggle all day to kind of find that bottom and make sure you hold it in the market. So I think there's still a lot going on that needs to be accounted for. And yes, certainly could this go up to the top? Sure. I don't think it would go very far beyond that in this particular moment. We've talked about 4 to 450. It's a bit extreme, Previously, I had this kind of coming up and then coming back down. And if you look at the overall picture, it is kind of curious, but this does resemble what happened on the S&P 500 back here, as opposed to what happened up here, which is very different. So I mentioned that I thought GME might be a bit front-running the market. It kind of looks like it's ahead of everything in these backups and advancements. I think AMC is kind of trailing, potentially, because all the breakouts that happened were breaks over kind of major downward creeks that took to new highs, like specifically coming up and breaking above. Now, there's a resemblance here. Don't get me wrong. That's very similar. But if you pay attention to like the ranges, you'd see what I mean. Like AMC didn't advance any higher than that pump that happened on the 7th. It's still like can't even get over that top. And we see that SPY and the others did advance over those two previous tops, and then they're kind of laying back on to see what happens. There is a bit of weakness, I think, in the market, and that's what I was saying. Like, there's clearly a lot of sellers still here to drive the price back through that range top. That's what I'm stressing here is like there could be a bit of a sideways day today if there's a stalemate, because you could basically have bulls trying to just hold this top, bears trying to like keep it or drop beneath it to avoid having to pay their options that they sold, which is very likely what's going on a Friday. So in the event that we go sideways today, I really don't think there's a lot of TA to be done about it until we see what happens near the end of the day. There's a compression point here around 1:30 in the afternoon. It's pretty typical that there's something around an hour or so before close on a Friday. It's very often the case because a lot of these places close up their options an hour early. They're calling in, if you've got margin or whatever. So saying, hey, can you liquidate your position or not? Or are you able to buy your calls or not, for example? So a lot of times you'll see that execute those, like fulfill them instead of just selling them. So like when we look at these kind of Friday setups, it's pretty easy to kind of tell like an hour or two before close that there may be something that changes. And until that time, really just trying to determine market direction here. And the first 30 minutes, we haven't really seen anything. It's very flat. Some went up a bit and then went back down. A little bit more volatile. SPY is just very flat, 0%. It's kind of coursing along here. I think the overall motion here made sense. I even had this kind of drawn out yesterday. I had it going off to the side a little more, but that would come back up to like 528 area and potentially just kind of do like a second sort of M shape here and try to see if it can hold any kind of support over 521. I think that's going to be pretty critical. You know, if we slip beneath it, is it the end of the world? Temporarily, no. But if you just kind of drop back and start making new lows here down to like 516, that's a problem. That's a pretty major SOW, as we call it. So there was a very, 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 very minor SOW here, and I'm not even like 1,000% sure that it is one, but I'm going to double check. I thought I saw it yesterday, so I don't want to like speak out of turn, but yeah, it may or may not be there. When I did the trend from, it doesn't look like there's one now that I'm staring at this one, because I did it with a channel. It really doesn't look like it's there at all. Okay, well, it might have been a different time frame, but I thought this little guy peaked below that trend. So you can double check on your own and see. I'll have to look a little more detail in a minute. But that is a bit of a concern, you know. You got to keep in mind, like, the fact that we dip beneath this floor is a big deal. If it's taking it back up to kind of sell more options and then load up shorts to drive it down, my target is still 505. I don't think that it's bearish unless it drops that value. And then I'm pretty bearish. Even though that's a breakdown, I know there's definitely a chance that they could create a new bottom here that's quite wide. There was another trend off to the side way over here. So you can kind of see what I mean. Like if you came down to 505 today on a Friday, you'd basically be right there. And I don't think that that would be particularly awesome, but I do think that on the whole, looking back at where we broke out, the fact that we didn't check that, it wouldn't be unheard of that we have some kind of a breakdown there. And then if you look at the overall trend, at least for now, it certainly seems that's the direction. So we've got kind of a hot zone down here. I think this is probably what bears are trying to achieve, get back to about 500 today, okay? I think if they're unable to achieve that, they're just going to hold right here. This is kind of the middle. I know these are like three different things. I hate doing that. But it's a Friday, and I really can't, I'm not very good at predicting huge moves on a Friday. The fact is that sometimes it happens, but it's pretty rare, you know? And I think there are moments where we've had some pretty massive Friday kind of squeeze moves that even carry over into the next Monday. But it's pretty unusual, you know, especially when there's uncertainty in the market to have, unless there's like another news drop. So I'll be looking for that information. You know, we definitely had that information back here before the big pop. The targets that were in play, none of them really got met. You know, they were all essentially like a Thursday. And I mentioned this before, but pivots are weird. So you might head towards a pivot and then turn down for a minute and then go right back to that pivot. And it seems like you're wrong. Like, okay, well, that was just wrong then, right? We were heading towards it and then we just deviated. That's not the way that I look at it. So if you're thinking that, oh, he's just wrong and he was right about one thing and now he's wrong again. I genuinely don't ever look at it that way. So I'm being sincere when I say that, because what we find is that this happens quite often in the market, is that you'll start advancing and then you reverse direction, right? But it just presents itself as more opportunity, in my opinion, because clearly the market wants to get back somewhere. And the deviation from that is not necessarily a long-term bearish deviation. Sometimes it can be pretty brutal, as in the case of the last few weeks. We've had some really rough times the last couple months, for sure. But on the whole, those bigger checks on the big picture haven't been made. And that leads me to think that it's still going to happen. One of the greatest examples of this, and both of which I called out in advance, and I don't say that to boast of myself. I'm just saying, you know, I had the wisdom at that time, I suppose, was given that wisdom to see that move incoming. But this is one example right back here. back in May, and I was saying in January and that was 6 months, right? But I was saying in January, like, hey, this is wrong. Like, this should be going towards 14. So as you're approaching these levels, I'm looking for information that's telling me, yeah, it's still trying to get there. And it's there. I mean, the information's there. The trajectories that are in place largely are trying to get back to that level, right, up top. And you can see it in the breakdowns, the crosses. Some of the ramps are a little off. You know, they go really, really high. They kind of would mislead you. But a lot of these are pretty straightforward. I mean, the trend from back here that we lost, that ultimately is where we kind of meet up. So these are things that I don't discount as like, all right, well, the market's just waiting for that moment, you know, to kind of make that move. When you're going that direction and then you suddenly reverse, it could even be a situation like this. And I hope this is not the case, guys. I really do. Because I know some of y'all are really hoping for something huge. And it may be that something huge is just starting. You know, we might be in this kind of a mode where we're going to start seeing this side of a deal and go back down. This is another example of one that just classically had really, really good trajectories that were building out towards a particular end. And there's a lot of them. And when you go backwards and you look at this region, there's just a ton of indication. There really is. There's like a huge amount of information here about direction in advance, if you know where to look for it. And all of these things were just kind of sitting there, and you're like, well, when is it going to kind of fulfill, you know? And what I did is I used some measurement tools to try to figure out where that might be. But ultimately, when it went down for a spring, I distinctly remember this date of March 4th, and I never kind of forgot it because it did have an upward iteration here. And it was almost like this direction, but it was really weird. And I don't really usually see that very often because I'm like not looking for it, I guess. I remember thinking that was odd and that usually that breaks down, but I was like, I don't know why it wouldn't just go, right? But it had already had that weakness, right? It already kind of like pushed through that trend. There's no way to go back and look at this and not see that. I mean, it punched through right here and then it got lost again. Well, that is an example of spring action, okay? In the event that the market does something like that, I do think, and I'll just have to sort of like see as we go personally, like for myself and I guess for those that follow, I'll have to see as we go, like what exactly is going on if that happens, because it would be kind of unusual, I think, for something like AMC, which has not had really that big buy-in. This is not it, you know. I don't see a whole lot of volume coming in. I do not see OBV like hiking up. I do not see it at all, and I don't really think that, you know, this makes a lot of sense as the penultimate, you know, fake out move. It just doesn't really look like it to me. I feel like maybe we're just waiting for one more piece of news, or we're waiting for, you know, something to happen next week. I don't know. Maybe it's today, but it's just not there, right? And this is not enough to me. This is very weak. Does that mean that, again, this has to be this way that you think it has to be, Booksy? No, that's a silly way to go about it in the market. It would be really silly for me to say it has to do this or something like that. But it's okay, I think, to have some expectation about, you know, hey, we want to really fake out bulls here. Is this really faking out bulls? I don't know. You know, we really don't have a lot of confirmation of that. When you don't have a hike in on-balance volume, when you don't really see that volume coming in, it doesn't really seem like it's working, does it? You know, it's kind of like, yeah, nobody really committed to that. So I'm not really sure why you would think that's like a huge fake out. You know, I mean, it's a decent volume hike, but it hasn't done anything that makes people FOMO like crazy yet. The people who come in here and say like AMC's dead, they're probably still thinking AMC's pretty dead, right? This is a good volume hike, don't get me wrong, but it's almost like the hike before it actually happens kind of deal, like a hike that kind of precurses the move. I don't see it, right? And I'm not I'm not just saying that because I want more of a move. I'm just saying, it just doesn't look right to me. So we had talked about previously, like, what about the possibility coming back down? I'd drawn a couple early markers. This was one from bottom to top here. There's another creek that's kind of outer. That's like way over here. That's pretty darn low. That's way down here at 253, like today at like noon. I would think if it does that, we'd have to have some pretty seriously bad news because that's a really nasty move. You're talking about like a 12, 13% down day. It just doesn't seem likely to me, but I guess you never know. But sure, like if you look at the big picture, here, let me just erase some of this stuff. If you look at the big picture here and you saw this as like an M that failed, like it tries to advance here and it's trying. I mean, it punched up this morning. This could be it, because it technically did breach the top right here. It went over the peak finally, not that long ago. That could be it. I mean, it could be the move that breaks the camel's back, so to speak. So when you look at that straw that happens and then you look at the next couple of moves down, it's pretty easy to imagine it dropping. I think what would be maybe more realistic is not coming way back, again, unless there's like 2 or 3 days of like nothing news or nothing burgers in the market. I think this is probably a bit more realistic if you were looking for a down red day to come back down to like 276. That's a previous support level. It would be good to check it on the way out. I don't think there's anything particularly controversial about it at this point. I think it's just there as a potential area to come back to. So it's probably just a retracement of like a 618 or something on that move. I'm not going to double check that. I'm just eyeballing it. It looks like that. So I'm going to suggest that that's a possibility, like 275. And that would, again, come back to that trend. That actually does match what we see on the S&P here. What I was saying before was AMC has a bit of a different look to me. And I was trying to kind of make a point that there's a lot of different things that could happen here, and that could determine what we see with AMC, is what I'm trying to say. But when you look at them, I don't know if I would think of them as like 1-to-1 in that regard. I don't think that's necessarily wise because where AMC is, to me, it reads almost more like, again, to some degree, it reads almost more like that initial push here. And I can see how they are following like ups and downs, like clearly, yeah, there's ups and downs at the same time or similar times. But the fact that it advanced so high and the secondary advancement does come back, push the creek again, and it's slightly higher than that second move on that first move. It sounded confusing, but back on the 7th. This is actually kind of where it is now. It's like barely pushing over that top. And so I'm kind of curious if, I can see a lot of different things happening here. The M cross, if it doesn't go up here, and it's struggling right now, if it doesn't go up here, I think it's probably going to come back down pretty swiftly towards that 280 mark. But then beyond that, I'm like, okay, well, they have a creek. We've had this for a while. This is the big one. And it goes way back. And we did advance here slightly over it. And then we're trying to kind of jump it and hold it right now, but we haven't actually checked it. And we kind of just took off without backing up very far to it. You guys are like, well, we checked it. We did this little dip right here. Yeah, I guess. But a check can also be like a trading zone. And I don't know if that's enough. It's hard to say. That back test, if we saw it go, we'd have to go back and say, yeah, that was probably enough for now. I think it could be. It was a backup. Looks like it gets pretty darn close to that creek. But in reality, if there's not enough liquidity to go forward here, that's still the zone you're going to come back to. It seems pretty straightforward to me. So I'm looking at this like just a cross-up, no preconceived notions about what has to happen, have to do this, doesn't have to do that. But that this is usually the place of contention. And we have a pretty nasty SOW on AMC, so I'm not positive. I'm feeling a little bit more bearish unless it just holds and that backup really produces a nice push above like 3, basically at this point. Okay. Now that's, you guys are like, well, it's going up. That's easy. Well, it is, but it's also like pennies, you know, we're talking about 10 cents from here. And that's a big deal to hold that level. Hold support above 295. That would be like an SOS. Punch above it and then drop back through this creek. That's a huge distribution signal. Okay. That's dropping back below 287 and then 285. So we're talking about pennies at this point. That's how tight this is. So if it drops back beneath 285, I'm thinking bear signal for now, which it may correlate to the market. So this would back up to this creek here, potentially even going significantly lower if it didn't hold there. You might think coming back into here would be a necessary evil or something. It does create like a delay tactic. We talked about this a little bit on AMC before. Sometimes the way AMC starts to delay is by curving out the creek. It'll start flattening it out. And we are seeing evidence of that right now. So it's like one of my least favorite things, because when AMC starts doing that, it gets pretty obnoxious, because we'll see that I'm going to clean this up a little bit. We'll see that form out as like a sideways motion. And it can be kind of like a headache-inducing type thing for me, because I really like using creeks, but when they're trying to establish a cat ear, sometimes what they'll do, the operators, is they'll just push the resistance, and that's just a way of kind of head faking. And a cat ear, if in this particular case, is most likely bearish. I'm still seeing a lot of people talking about the short squeeze coming and all this other stuff in May, and look, man, you got to do what you got to do. I think there's going to be a pump, but I don't think it's going to be that simple, at least for me. Okay? Some people think it's that simple. Okay, maybe it goes up, chops here, and then rips, and that's it. I think it's going to be a really weak-looking move, and then it might do that. It might kind of come up and chop for a minute here, and then just rip on the 17th or something up to like 4. And I don't think that's necessarily a bad idea to do something like that, but I honestly think that might just be to fake people out, you know. Again, that's my TA about it. So in the meantime, you know, would consolidating here be the end of the world? No. And another thing that I think might bother some folks about this particular 2 or 3 days of upside within this weird, you know, kind of longer winded backup is it doesn't feel like the squeezes that a lot of the community, especially the AMC and GME community, when they refer to squeezes, they're talking about these massive moves that just rip and just never come back, you know, and they may have these big swings of like 30% and then drop 18% and then they run another 40%. And they're thinking that that's kind of the model of the squeeze. I don't think that's how most stocks squeeze. I think what we saw yesterday and the day before is part of a short squeeze motion, because this right here, it is a lot of running to the door to get out of positions. Then you have the buy-in that's kind of a localized bull trap, right? And I already told you that I thought that that was a bull trap when it was happening. Like, it didn't look right. It looked like it was going to drop back down. I was just optimistic that we would maybe not go back below this level. And I'm less optimistic as time goes on, because it keeps showing that there's a little bit of weakness there, right? What you've got is, again, an attempt to kind of drive the price back down low in order to, again, test the waters. And if bulls are there, the squeeze is still going. Meaning right now you're trying to, there's some people that loaded more shorts here, sure, to drive the price low. But they're also doing what they can to sort of prevent it from going up again too rapidly. So they have time to exit positions. And then you're going to see like probably, again, maybe a final drop here or there. It could be less than crazy, or it could be really crazy, but you have a likelihood of some kind of a drop here before a reaction. And I think that's totally normal. And I think that's part of emotion. And then you have another covering, that could happen. So I still think that the SPY gap around 563 is that next level. I'm not changing that. It may be closer to like 558 if it doesn't break that creek, but that's where I would see it. And one of the things I'm wondering is, like, during this, if this is doing some kind of upthrust motion and it's ultimately bearish, it's not really like a bullish motion. It's just there to kind of give some folks a quick out, right, to resell positions that they may have been stuck in, for example, back in April. That's, again, a good reason to come back up. You're going to have a lot of people kind of selling off at like the midway point, which is what we see here at 535, trying to press the stock back up. Shorts trying to go the other way, who are maybe jumping in a little too early, thinking like that's the big head fake. And they're like, all right, now let's keep going back down. And really, it's kind of a double-edged sword, right? Like the shorts that are trying to get out, who are the bigger hedge funds, if they're ready, if they think that we're going to go back up and back test this, they're not going to waste a whole lot of time. They're going to be exiting positions as they can, but they're also going to be trying to generate, maybe even buy in order to help drive the price back up to reload at some point. But ultimately, like, the goal would be to kind of get you out of those positions as low as possible, right? So you can buy back in as low as possible. So there's naturally going to be a lot of push down. So there's two forces that would work against a bull here in some ways. One is the extra shorts jumping in who say, that was it, that's the head fake, everything's still bad, we're going to go down really low, and we're going to just keep going down. And so they'd be buying back in here, especially on this downward motion, like, oh, we're going down again, market's still crap. Well, guess what? If you bought in down here, you may have an opportunity again, but if it bounces here, you're done. Like, all the positions that are shorted right here from 526 down to 511 are going to be running to the door again. But I think your long operators would be taking this as an opportunity. The long, meaning like the bull operators, would be taking this opportunity to buy back in, right, on a pullback. And then the short operators who do not want to see this go back up with their positions in hand, right, would be preparing to potentially cover those positions. And you have to remember that there's two big blocks here that were shorted, mostly in extended hours. One is right here, and then the other is right above. Those gaps would have a lot. And there's a lot of selling that happened right here as well. We're really just sitting on that heavy selling climax. If you look back, that's exactly where we are right now. It's like we're sitting on that heavy selling climax. So I don't think this is over, and I've said it yesterday. I'm going to stick to my guns about that. Even if it drops back below here again, I think the purpose of this is to get out of positions. I think dropping through that heavy selling climax would be to dip down and try to get to different as low as you can go. And if they can manage to get it into like a spring motion down here and drop below the previous low, which does induce a little bit of an SOW as well, they will. Bear operators will do it. It's a liquidity question. If they can't manage to do it, then they're going to take as much time as they can today and go sideways. That's what I'm trying to say. I don't necessarily see it as like bad technicals to say it could do either, because I just don't know what the volume is going to produce ultimately. I would just suggest that, yes, there was a little bit of weakness yesterday, but I told you all also I like the shape of this. I still think I like the shape of this. I like that there's been bigger money buy-ins at the bottoms. Clearly, to me, it's like a lot of covering and or buying right now. I don't think that a drop is bearish unless it goes too low. It's pretty straightforward. Because I think it's very simple to me. Like, it's about getting back to this like heavy selling area right here where I think most of those positions were entered, right? And there are some that were way down bottom, but those are, I think a lot of those are going to be again, would have been exited like out the gate right here, which is, again, maybe a reason why you try to drive it back down. That's just a natural target. So if you're wondering why I still think there's a squeeze or if it's still going on, it is, in my opinion, very much so. I think it's very evident based on where we are, where these bounces are happening, that this is where those shorts would have been in bigger trouble. And we kind of passed right through it. And we're trying to get back down into that area in order to kind of alleviate some of that short pressure. For their sake, that's what they would be wanting to do. Okay. Now, in the midst of that, could bulls have weaknesses? Absolutely. Absolutely, they could. So, with all that being said, when I look back at like AMC, I'm kind of in this mindset of like, all right, it's pretty similar. The story is pretty similar. If you look back at the major sell downs, they happened here and here. Notice where we are in relationship to where they are. We are up high. Notice the difference between that and SPY. Like the difference is pretty clear. Like if you look at the major selling climax here, the one that happened from Friday the 4th, I guess it happened till about noon. We're really sitting right on top of it. We're kind of already on the first. And we're talking about going from the first down to the second. You know, if we're unfortunate, perhaps, and that's like a big word, but maybe going down to that one. But AMC is actually floating high. And that's why I don't necessarily question the idea that this could have had a pretty nasty SOW on its own account yesterday. I think it did. Where SPY maybe didn't have that same exact feel. It wasn't like super dramatic or doesn't seem as dramatic. That's probably because like if you were to put these side by side, they wouldn't even really compare, but AMC's is like way up here, right? And then that was the first move. But then the second move, it's like everything is just kind of like sitting up really high. So the potential for a serious drop on AMC may be greater than the S&P 500. I think it would outperform that drop. And that's maybe not the way you want to look at it, but that's kind of what I think. It's probably going to do that. And it just punched over the top, slid back down. It's pretty likely going to happen. This is not, again, look, man, I've already heard it on the stream. I've heard it on the chat. I think people are they're jumping the gun, right, with this idea that the bull trap is done. I have a right to disagree, and I disagree. Okay, I do not think the bull trap is done. I think this is the reaction from shorts and option sellers to get back to a position of comfort so that they can withstand another leg up if bulls step back in. Really straightforward. And frankly, there's a lot that was left on the table. So I'm not saying that I wish that had happened. I said yesterday that I would have preferred to not let the shorts out right here. Like if this had just dipped down and then reacted back up, this is what we were looking at yesterday, I would have called it a shallow S-curve, and I would have just been like, all right, we're going back to the top. It was really quite straightforward. If you look at that pattern, you would see this as like, again, like a really simple rotation, and it would have been like that. Really simple. This would have been like a rotational symmetry. It would have pumped back up. Very, very straightforward. And that does happen. So it wasn't like out of left field, me having an imagination or something about it. Booksy's going off again. No, I mean, that happens like all the time. We see this rotation happen. In certain market conditions, in certain environments, that would happen, I think. Pretty straightforward. I even think there was a trend there that tried, but this is where things kind of, if I'm looking back at yesterday, I want to critique what I did yesterday, and I said it, but I don't think I stressed it enough, and I think that it ultimately was a big determining factor. Remember when we said it had to come back up? And I was like, well, it could be a little bit bigger, but it really needs to come back up above. And I had actually drawn it out earlier in the day. Very similarly, I said, well, it's almost the exact same thing, right? But it's just smaller, or it's smaller. I said, this really needs to come back up above this top. When that doesn't happen, most of the time that's a bearish signal. It's like a failure to advance back above the top. It means that you're not changing direction. You're probably going to see continuation, and we did. So at that point, then I started looking at the 618 level, the 0.5 and the 618 were down here, and that was it, right? That's how the day went. We didn't get any reaction off those. Same deal. Okay. But absolutely, was there an effort here? Yeah, it was just really crappy, and it didn't work out. It's that simple. And so then you're going to go down and build a range, and that's what happened. So we ended up having like a really long-winded area. And I'm saying right now, I think it could continue. I mean, frankly, this could go again until pretty much the end of the day. So we'll see how it pans out. We'll see if we make any kind of dip before then. You know, in some ways that might be better just to go ahead and go down and like let it be what it is. We may get a nice reaction up earlier in the day if that happens, because you should see some shorts covering right here. If they do, if they're able to take it back down to the 510s area, that's what you'd probably see. Okay. Yeah, but we don't want to let shorts out in a short squeeze. You want to just like pin them, and yeah, I know. That's what I was saying yesterday about bull operators. Like, I didn't really think that they would go low because I was like, I don't know, why would you let them back out? But I may be underestimating how many hedge funds and the like had really played the hard, like the downside. You know, we hear a lot of news about people exiting positions because those are done in filings. We do not hear news about all these short positions opening up. And I'm not saying I forget it, but sometimes it just doesn't really cross my mind, I guess, that, oh yeah, there's also like a huge amount of short positions that are being opened, you know, as we're coming down, assuming that we're going to continue down. And these are hedge positions predominantly, but there was probably a huge amount of quote unquote smart money that was playing downside after April 2nd, that this was going to be bad for a while, and then it changed. So I don't know. That just, to me, this is more of a demonstration of like taking the temperature of the market kind of deal, right? Like it wasn't really ready. I think a lot of people were caught unawares, and that's okay. So there's going to be a little bit more of a struggle, probably. So I'm not particularly concerned, is what I'm trying to say. If it goes back down, it goes back down. I'm a little more concerned about AMC than anything else, because I think the downside for AMC would look really bad by comparison to SPY. SPY may be down like 1% or 2% here, you know, whatever it is. It could be a pretty red day, like 3% down. And the news would tout it as like, oh, another red day of tariff troubles and blah, 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 blah. And then there'd be some news or something on Monday. But for AMC, it could be considerably worse. Even just dropping here is like 4%, but I don't know, man. I have a feeling that it could be significantly worse for AMC based on the way that this thing broke out. I would not be surprised if it has some pretty nasty sell down and even comes back through here again. And this is what I was getting at before, was I don't really like when the creek starts expanding like this and it doesn't just break out. When we see squeezes, we typically see it expand and then just break out. Like it breaks the creek maybe once or twice. This has done it 1, 2, 3, 4 times. This would be a great opportunity to come back and like test it. But at the end of the day, it's like, man, this is taking a really long route to sort of get where you have an actual breakout. And that bothers me, because the only time we see that, or the only time I've seen it regularly, is when the cat ear is like flattening out. And I talked about it a little bit yesterday when I was talking about what I don't like to see in the market, and I don't like to see this pattern right here. And what this typically looks like, it's a little different for something like a GME, which tends to do this a little bit more often. But most stocks, when I see this, it's not usually good. Now, some people will say, well, why can't it be good? It could be like a bowl, like a cup. Sure. In rare circumstances, we do see that, but then the cup also has a handle, right? And that usually ends up being a pretty significant backup, maybe a 50% or more. That's not impossible, but I'll say this, and I mean it sincerely. I don't feel like that I feel like that rarely happens, especially for something like an AMC. Most of the time when we see this pattern, it's usually because there's like a cat ear descending. And I know this is going to look a lot like that August example, but it really is very straightforward to me, because usually there's a series of weaknesses. And then if you get to the end and you're still like flattening out and that creek is like busting, it'll look like a shrinking iteration, which this does, but you're going to end up with like this weird kind of fanning out of creeks where like this one goes here and then the next one's, coming out further, and then the next one's coming out further. And this is exactly what I don't like, because it just continually presses and presses and presses. And you're like, yeah, but then it'll squeeze, right? Yes. But this motion in itself is like a breeding ground. It's like a hive for bears, because they love the pump and dump. They love the pump ups because it gets people trapped in the play, and then they can dump it and go back down and accumulate short positions. The low accumulation is what you watch for. You don't want to see that U shape. And usually what we see is that that's typically what we get in these kind of motions. I'm not doing it right there because that's those are straight lines. But you're like, yeah, I know what a straight line is, Booksy. I know. But this is usually what we see in these motions, is like you spend way more time in like low spots than you do in high spots. That's the kind of the opposite of what you want to see, right? And one of the easiest things, and I said it back here way before we took off, and I did say it up top, by the way. So if you're going to criticize me, that would be a good place to do it, because I said it right here as well. I was like, I don't know, it looks like it's rounded. Like it looks like accumulation to me. I question it now to this day. Like, why did that look so fine? Like, it looked good. Then it changed. All of a sudden, it looks more like a U, right? That's completely the opposite. This looks distributive. This looks more accumulative. But it's very evident in the two previous ranges, even the one right before it. Like these shapes right here, with that flattening kind of look, way more time spent trading lower portions than the upper portions. Considerably longer time, versus these, which you spend way more time in the top than you do in the bottom. And we're not talking about high volume tops. We're talking about kind of low volume tops, high volume bottoms. These are higher volume tops, lower volume bottoms, but you spend more time in the bottom, right? And a lot of times you might think, well, that's kind of backwards, right? Again, remember the buy-in is where you see the volume. So if you're quote unquote buying in at the top, well, that's probably a lot of shorts, right? They're not buying, right? They're selling, but you get what I'm saying. So it's the opposite of what you might expect. And I think that's very, very, very important when we're looking at something like as large as this. And it can be tricky because this one's like really low volume overall, but like what's the main motion here? And it's hard, man. I don't know. This one to me still looks more like distribution, because there's a lot of these U shapes. And if you really look at the overall patterns, it's just a lot of that kind of whoop and then back down, whoop, back down. You're continually making lower lows. So I didn't really even take this into consideration that could be something that we have to deal with here until started looking at it this morning. And I was like, I don't really like that. So anytime we see that kind of flattening, there's typically like the cat ear kind of thing going on, but then you get the ear. And the ear looks like a big bullish move. And it usually is somewhat bullish. Like you're probably going to see something like this, where it looks like it's going to go up to some target from the middle of the ears. It could be high, it could be low. It doesn't really matter. The way this is positioned is less important. But this is where you get the big head fake. And I don't think we're there yet. This isn't even like pushed out. That's what I'm trying to say. Like I get where people are coming from with the bear trap, but it hasn't even done this yet. Like there's no move. It's just pushing up the creek and backing up, pushing up the creek and backing up. It's doing that flattening bit. So I don't see it as, oh, it's over, that was it. Nah. Like we could back up pretty far at this point and we'd still be okay. It would look nasty for a minute, But that's it. I mean, that's as straightforward as it is. But it's at the same time, it's frustrating because that's what I'm trying to kind of get across here. It's really frustrating to me because I look at this and I'm like, people want to know, like, well, what's the level? And I'm like, yeah, it just keeps changing. Because every time you push this up, not only are you giving yourself more headspace to now have to re-break it again, right? Especially if it's weak and it's taken forever, but you're also giving yourself time. Because every time you flatten this out, it's dragging out that creek in the time spectrum as well. You know, what starts as, oh, we're going to break out here. And if you're looking at this diagram I'm doing, I'm kind of dragging this box outward and outward to like, oh, we're going to break out maybe over here, you know, and then, oh, we're going to break out even further now. You know, you have to go way over here, you know, to get to that end. It's like every time you push the creek up, you're also pushing it out in time. So what really matters to me is that support level getting got. And without it, I don't see, and I don't see it yet, it hasn't happened. I don't see a very easy path forward. So where is that level, Booksy? Can't you just tell us where it's at? Yeah, I mean, I already kind of have to some degree. We talked about 296, 297 a lot. That's basically still the same area. But also there's these parallels that are running through here. I think it's very important to note where we are in those parallels. And right now it's $3. It's very, very simple. And that makes sense because we built out a floor along 296 for a long time, 297 for a long time. We failed to kind of recapture 3. So it makes perfect sense that would be kind of step 1. If you're looking at this from like an S-curve or an iterative motion, we've already technically recaptured one of the iterations. So just to encourage you, because that might be a little discouraging, you're like, well, I don't want to deal with all this crap. You know, I don't want to have to chart it like that. One of the ways to look at it would be to do it from an outgoing perspective instead of like looking backwards, you're just looking forwards. And right now, the forward perspective is that if this is an iteration walk down, that this actually pushed up and out over kind of the first year in the floor. So you would look at that and you would suggest, all right, well, the first walk up went to the first year in the floor. It kind of came all the way back up just now and retested that bottom right there. So the second year by nature, or the second iteration outward, would be doing something very similar. So looking back, you would suggest, well, where is that? That's right here. It's at 326. And that's what we were saying earlier, like may not exceed 320 at first. The measured move is like 320. But that makes sense because it's coming back up to the floor, which is very similar to what happened here. It pushed back up to the floor. So the second move would likely push back up to the floor. Well, what are you interpreting based on that crazy move on Monday? I don't really know. I know that wasn't quote unquote planned, but it was wildly oversold, like market was when that news hit, and it was fake news at the time, and then it became real news. And that makes me question if there was actually like a leak, and then they backpedaled, and then they decided just to go through with it. I don't know. As opposed to just that one guy who was just talking. He was just talking about stuff. But yeah, I mean, that's the next level, right? And then you're like, well, what's the next one? Yeah, keep going back. The next one's the same. I mean, it's the $4 mark. It's pretty much exactly what you would expect. So does it keep going from there? I don't think so. Because if you look at where the iterations start, the expansion starts back here on August 12th. It was about about that time when the compression changed and it started working outward and then downward. So I would not put it past that point, at least for now. But you're saying there's a chance. I'm saying that if it's going to hit anything, it hits right here at like 409. That to me is the level. It's pretty straightforward. Those would be the 3, 1, 2, 3. That would be enough, I think, and that's the extension. That would be enough to give you a lot of hopium, right? Like a huge amount of hopium. Goes to 230 before it goes up. No, I don't think so. The reason is because you do not have any buy-in. So I'm going to tell you in theory why this is important, but if you just know like basics of liquidity, you'd know like this could produce a massive move for the shorts. Driving the price back down could create a huge reaction. Or excuse me, driving the price back up could create a huge reaction. I flipped the chart upside down so you could see it. That's pretty low. I mean, that looks, on this chart, it looks like a really bad dip. But that would be what we call like an SOW if we were looking at it from the other standpoint. But then we would be confused because we'd be like, well, yeah, but then it just goes. If you're looking at it from upside down, it just looks like a spring. But it also, to me, reads as like a sign of weakness. So that drop is really important because it anchors a later move. It also matters for liquidity purposes. Shorts covering right now, yeah, that's one thing, but it's not going to take you all the way up. Loading up on the bulls, that bull trap is necessary to hike that on balance volume so you can get a really big sell down. I don't think they have the liquidity for it, but I've also been wrong about this, so who knows? I was wrong about it going up to 8. I thought the same kind of idea, that we really should see some kind of a massive push up in order to reverse and go hard the other way. But in this case, they did get a huge hike in on balance volume here when they pushed to 550, and that was like the lowest I could see it going when push came to shove. So they didn't end up needing to go very high to drive that price clearly way back down and instigate a big sell-off. But now that you've done the big sell-off, you're looking at this, where's the volume? You know, it's like disappearing. You really don't see a volume pickup until right here in the 2s. So buyers were pretty much nowhere to be found here, unfortunately. And sellers were very dominant. I think that, again, like, I don't think this is that complicated. I think that you're just looking for like a slingshot for liquidity. And you have to go up before you go down into a spring. And I don't see any really major up here. Any real spring will have like a fake out pump up and then it'll dive. It always does. So the operators would cover positions and get people buying in, like heavy buying. And then they would really heavy buying. That's what I'm saying. It has to be like convincing. Like it looks like it's going. And you'd see something that looks like, whoa, this is it. Shorts are trapped. They're going to go. Really, it was shorts covering that got you there. And the FOMO happens after that happens. And then they're not done yet, so they're not even worried about the rest of their short positions if they have them. It's just a chance to load back up. And then as they start driving the price down, people panic because it starts looking really bad that they bought in too early. And then it's bad. That's a real spring. Spring has to be like despair. And I know that sounds horrible, but it is what it is. But, you know, your suggestion of it going down first does not... It's not like a hard no from me. It's just a gentle, like, I don't think that's what's going to happen. Because there certainly are times where, like recently, like I was wrong. It didn't end up needing a big pump. It got huge hike in OBV just going back to 5. But do I see anything right here? No. And then I think we're just missing, in my opinion, I think we're just kind of missing that last pump and dump going into June. I mean, we just don't have it. I think it's tricky because there's divergence here. And I do know that in the grand scheme of things, if this had hiked up, I'd probably be a lot more convinced that that was enough, that push up right here to like 370 was enough. I might have been more convinced of that. I wish I was, because it would be a lot easier for me to say, yeah, we're just going to go. But that to me doesn't really look like much of anything. And I don't know. I guess it got him enough ammunition to get back down here. It's not impossible. Like I'm trying to say, it's a kind of a gentle no, because I just don't agree with that. But if I'm being intellectually honest, I think that it could be that way, because there's been kind of a disconnect between my expectations at times about what typically operators do. And I don't see any kind of backup at all to 4. And that's one of the things that kind of bugs me here is like we don't have a real backup to 4. It didn't happen back here, and it didn't happen here. And when that starts going, I know it's iterating because I'm like every time I'm getting the same target. That's what I'm trying to say is like every single time I'm like getting the same target, and I'm like, something's off. We're just not going. We keep getting the same target, and I'm like, yeah, there's something wrong with this setup. So you can go back, look at 2020. I'm not saying it has to be 1-to-1. It does not. But look at 2020 and look at the hike that happens in on balance before the massive drop. And the drop itself led all the way back down, not to the same level, but to like way back to the beginning. Like they reset based on the on balance volume back to here. So my question is, we're really close to that right now. Do we think that dropping the chart from here, 290 down to 2, all of a sudden, let's say we just dropped 2 in earnings and we don't ever go up again. Do we think that's enough to drop the on balance volume way down, to the levels that were being met in this blue zone? See this area right here? There's 2 spots here. This is September, October 2023, and then December 2023. Do we think that dropping right now would lead us back to the same areas in relationship to on balance volume? And my question is not really about the price action in this regard, but really the on balance volume. And I think the answer is no, because I'm not seeing a massive, this is a huge downward move, but I'm not seeing on balance really change. It's basically flat from where it was on October 14th, which is a bullish signal. I think that's a very bullish thing. It is. I'm just curious about the nature of it. Like, why are we not going lower? I don't know. It seems like it's just missing a piece. Like, we need a real huge buy-in and a real huge rug pull. And then that gets us down to that level. That's my opinion. It's not financial advice, whatever people say. I do sincerely mean that because I think that you need to trade whatever you think is right. But I think that makes the most sense to me. And I've been talking about this for quite a while and been kind of mocked for it lately at times because it didn't go to 4 all the way. And I was like, yeah, I don't know. It just didn't go there all the way. I was like, but that doesn't mean it's wrong. It just means that it's possible that I'm just early, way early. And we're, in my opinion, this is like that year and it hasn't finished. You're missing that last distribution. That's my opinion, okay? I think it'd be easy enough to argue that this is the year and it's actually done. But that's not my TA, so I think we're looking at that yellow line up to like 4. So from like 366 up to 410. I think that's what we need. And that would really get the party started, in my opinion. Mm-hmm. I gotta be honest, if I were just looking at our RSI or just the price action, I probably would think that it's about to run. So it's the on balance volume that really disturbs me because I'm like, I don't really get the point of going right now. It just doesn't seem like it brought it down at all. They're bringing it to a level that we historically bounce off of, but they're not bringing it down to the bottom. We have not tested the bottom since May 29th, 2024, a year ago, roughly. We haven't tested the bottom of this channel here since then. And that's a big deal. If you look backwards, every time we've kind of bounced, it's been off this like midline area ever since we got above it, but we haven't plunged beneath it. So it's kind of a secondary way of looking at this, is just look at it like a trend. I know my charts can get kind of messy, But let me see if I can bold that for you so you can see it better. Just real briefly. But like that's the peak. This is the bottom. And if you look at that lower zone and then the middle's like right around here. And we can make it like orange or something different so you can see it a little bit better. But that to me is fairly straightforward. It's like that orange bar has represented largely like where we bounce. So let me do it. I'll even block it out. I know adding more doesn't usually help, but in this case it might, for if you're just staring at the tiny chart on your phone or something, you might be able to see it a little better. So this is what I'm trying to argue, I guess, is that I don't think that this is enough. And nor is like a small dip beneath it. I think they want to plunge back to that original value. And until they get there, I don't think it's the buy that people might say it is. So I'm highly skeptical that they just drop down there without another upthrust from the operators. This one. So I think this zone is where we're trying to go. That's where the big buy-in needs to happen. And I think we're not there. And you notice that like all the efforts that are being made are kind of being made in an attempt to like get back into that zone. So if you look at all the buy-ups, there's one here when it crossed up and over. And then ever since then, it's been on top of it. And we've been doing everything we can to kind of come back down. There was 2 early kind of push downs, 1, 2, to test liquidity probably. See how we could go down. Then we got 3, 4, 5, 6, 7. This is the first one in like over a year. So again, since we crossed up over in like, well, it's not over a year. It's almost a year, maybe a little less. But this is July 2024 was the last time we like pushed through it. We just did it again due to tariff news right here. So how high does it need to go to get down there? Well, it totally depends on when you think it gets down there. But if you think it gets down there by May 14th, for example, if you thought it was going to have to go that quickly, you would suggest that, well, wherever we're anchored now, there has to be a liquidity center. I think we just argued that liquidity center was likely around 296 to 3. But you could also say that the liquidity center is where we touch that orange marker. And we pushed over it just a minute ago. That's like the middle. So it would be simple enough to suggest that this just flushes up and then comes back down, hits the top of the channel, and then drives all the way back through it. I think if they do that with some fervor, everybody's going to think it's running, squeezing. And they did it over here, and it amounted to that big OBV pop. It's the same spot, but lower because of the trend. So I think that's the game, is to drive it up between, again, 360 to 410. And I'm saying 360 to 410 not because I necessarily think it stops short. I just think it's going to depend on where they get the buy-in that they want, like the on-balance volume hike. And I also think that it's probably going to be a head fake. So you have a possibility that there's like an extension on that move that goes quite high, but maybe only for like a minute, and then it drops back down. So I don't think we're going to necessarily camp out there. We might do a little more than usual. And that's what I was suggesting about this setup, is that if it took longer than expected, it might be because it probably doesn't look like this. I'm not sure why I drew it like this. But it would be like let me redo it. This is not the best one. It would look like a flush back down that then consolidates. And this is what I was saying. What I would be nervous about going into May is that they do something like this and really hike up the on-balance volume and then just kind of leave it to dry, right? To rot. And then like everybody thinks it's going to go, and then it has like that May 14th move. And I don't want to say it's like completely the opposite of what everyone's expecting, but it wouldn't surprise me at all if there was some kind of an effort made to sort of fake out everybody and make it look like it's going to run and then just fail. And drive the price back down. And at that point, I think you're likely going to slump pretty hard. and just have like massive sell down. That's why I'm a little nervous about the call out that I made earlier, which was in agreement with some folks like Roaring Kitty even, who suggested that it might just squeeze in the same time. But I think this motion may need to be first, in which case, yeah, we could be stuck down bottom for a minute, you know. I definitely think it's possible that this doesn't leave until July, you know, that there's an accumulation. Most springs have an accumulation, so it'd be weird to go down and not do any buying at all. And this would make a lot more sense to me in some regards than this, but it could be a terminal shakeout that just reverses. And that's the case of like it goes really fast and it gets down before May 14th. If that happens, I'm more inclined to believe that it just rockets. But if we like float here, I don't think it's going to be a repeat. I think some people have already expressed that they feel it's going to be a repeat of this because it went through the same areas. I don't think that's the reason why. I get where that's coming from. It definitely looks very similar to this drawdown, except it's slower. And don't get me wrong, I think there's accumulation going on, but I genuinely think that that's probably just because we didn't really trade it very much, so we're just trading it more. We're checking that box, but we would definitely not want to go until it's time to, like in my opinion, we wouldn't we wouldn't go until we come down and test lows. So yeah, I think it's going to come down low. I'm just going to say that. Anyways, and I think it needs the pump. So I think on balance volume will hike way up. We might hit like 370. We might hit 390. We might hit 410. And then those levels would be met. You'd have a really big hike in on balance volume, and then you'd have like a massive rug pull that basically 50-50s down to some bottom around 180 to 2. And that's where you finally get the on balance volume to really plummet and convincingly plummet so that you shake out as many people as you can and then you take it up. The spring is effective when you can get a lot of retail out of the play because they think it's done. Like it didn't go, we're screwed kind of thing. Didn't go on May 12th, we're screwed. I think it should be now. I mean, I think there should be a buy up into April. I think on the charts, April 15th through April 29th were the most likely places locally that you'd have high volatility. So we're getting there. That's a distributive motion right here. So it's going to probably try to make a move low now. You see how it pumps up above? See that candle right there? It pumped up above and then drove the price right back down. And it just has no body at all to it. But it pushed the resistance. Specifically, it pushed this creek. And then it reverses. That's a liquidity grab. There's still really low volume today. So I'm not saying flip a coin, but I'm just saying maybe just wait. See what happens. But yeah, that looks distributive to me. If you want, I could get really nitty gritty. I don't really feel like it today. I could get really nitty gritty on like fractal stuff or iterative stuff or wave stuff. I feel like I've been doing that a lot, and I need to focus on some other stuff this afternoon. So what I want to do is try my best to kind of do a more broad brush approach and just kind of keep it simple. And that way you have some money or some dollar targets to look at and determine what you want to do. So this is actually almost exactly what I thought was going to happen today. But I also was wondering if we would just do it again here. Why? Well, I'm not a big fan of like it has to be the same every time, but a lot of times there is a rhythm. And this rhythm looks almost like a copy paste of what we experienced down bottom. So if we're just being like straightforward about why I thought it might do that, that's kind of what I was imagining. I was like, well, It just looks a lot like what happened back here. There was an established trend down, it pressed down, it kept it low as long as possible, and then it broke out and went. And these are iterative motions, like they're shrinking. This one, and this one. 1, 2, 3, but the 3 was a cross up, and then 4 ends up breaking out. So 1, 2, 3, 4. If you want to see me visually draw it out, 1, 2, and then 3 and 4, it's easy to keep track when it's like that. So you can see that shrinking happening, and then the boom, expansion, and it's gone. So I imagine like there could be something like that, maybe like a 1, 2, and then a 3, 4. But even that, I'd be like, meh. I think they could, if they being like the option sellers in the market and the shorts in the market, may be able to hold it and prevent it from really going very far at all. They may head fake here and make you think it's going to go up probably back to like 536 and then drop the price end of day and then Monday. And that way they could close sort of on this anchor up high, which I actually already have on here, which is the one we were talking about yesterday. We were like, oh, we need to come back up above this price. I think that's probably where it would be anchored if it went up. You know, what price is that? That's 533 roughly. So I would be not surprised at all if somehow we managed to close basically where we are now. That'd be whatever. But I genuinely wouldn't be that surprised if we closed around 531 or something like that, or even like a little bit lower. But basically about 531. Just hit that 537, come back down to 533 and kind of nestle in there. That would be sensible to me going into end of day. And then maybe even Monday having like a spike one way or the other, like really quick, flash in the pan, kind of drop and then go. Alternatively here, if it's distributive, that push down would happen early in the day probably. I don't know why you'd wait till here. I guess you could, but again, I'm just really eyeballing this region. I don't know. Maybe it doesn't ever get back there. I'm really eyeballing this 509 region, I guess. That's kind of the like high or the higher low here. There's a double bottom of sorts. I'm not really talking about Tesla. There's not much to talk about. It's the same thing. It's the same setup as SPY. The numbers are a little different, but if you go backwards and you look at those sell down levels, just look at where we are. And it's pretty obvious why we're here. I mean, you don't have to have like fancy TA to just look at the volume from back here and know that that's where a lot of shorts got into the play. And now we're chilling out there. I wonder why. Well, you could break even if you were in a position that was short here for a couple weeks out. You could break even right now. I don't think it's that complicated, you know. The question to me is not what we're doing here. It's really what happens next. This zone makes a lot of sense to me, but and the creek retest was good too. I think what made me nervous about Tesla was that it did seem like there was another potential to come drop. And I put it over there, but it went at that time, it didn't go low. But it wouldn't surprise me if it still happens today, like comes down all the way to the 237 or something. I think it would be like a local spring. And then it probably rips either end of the day or next week. I don't know. I think the market's undecided, but I think that is reflected right now in like the heavy volume. But I think that also is just because people were not expecting this necessarily. A lot of people were not expecting this. Because if you look at these zones that were covered, this is a short squeeze right here. I mean, that's what it is. It just leapt over the entire range. And then if you look at where we were hoping to kind of bounce, we were hoping to bounce yesterday here, like that it wouldn't dump 250. It's the same thing. We were like, oh, well, if it's a shallow S-curve, it just dips and then rips back up. That would allow shorts, that would trap more shorts. I think in some ways it's a lot more violent, but what I'm trying to say is I think this just demonstrates how many probably larger firms were actually short. Like there's too much pressure to just let it go, like keep ripping. This isn't like one firm that's getting screwed. This is like probably a huge portion of the market that was like not prepared for that move. Which, yeah, I'm not saying anything about that from my standpoint, other than just I think that's probably true. I just talked about AMC a lot. Not saying you have to rewind, but I did just do a huge review of AMC, and I would not be surprised if it popped, but I'd also would not be remotely surprised if we take a pretty nasty dip today and come back to 276. We already pushed above the floor that we probably need to push above, which was around 296, but 276 or thereabouts is a backup that we could definitely make. And it's just a matter of like an S curve versus like an M top that then needs to bounce. I don't see it as a complicated equation or something. Like this particular setup right now to me looks kind of bearish, meaning it made a dip yesterday that was an SOW. It dipped again today after going high. It definitely doesn't bode well. Volume's pretty darn low though, so I don't think anybody's really picked it up and taken it the direction they want to take it. It's still pretty low. I'm on a 4-hour chart, so it's going to be pretty low, but I mean, it would not surprise me to bring it back down. Again, similar to the others, this is the zone that shorts would probably want to cover in, and then the second zone is really low down here, but it's hard for me to imagine that a lot of those people haven't gotten out already. So yeah, 260 up to 276 would probably be a big target for bears right now. So, I mean, if you think it's just testing 3, I mean, it kind of already did that. I don't know. 297 is as good of a test of 3 as 3. And let me just put it this way. If you hit 297 and then you go knock down beneath a trend, it kind of tells you like the ebb and the flow is not really in the favor of bulls right now. And not only did it get knocked down, that's one thing, but just to get knocked down below a trend, that's literally like you're losing ground. That's a big deal, you know. There's a lack of stopping power perhaps there. So this dipped below the trend, which is like an SOW in my opinion. Dipped below 2 trends yesterday. The back up to the creek and the rising ice. And then it goes and advances and then immediately drops back beneath the other. It's almost like this is just not respected anymore, which is probably true. And there's some buy-in, but look at that volume, you know. There's such little effort going into this. So my opinion is that the M cross is already kind of working out, and unless we see a break above 3 here and hold it, really this 296 area, I'm bearish today. It's that straightforward, because I would see this as like a weakness with an up thrust. And then we're probably going to see some kind of like a secondary move to try to fake out the market. Most of the time, you're going to have like a series of secondary motions, something like that. And then it would drop like midday or something. It may not even be that dramatic. It may struggle to even get back above here, which would not surprise me one bit. But if it does do it again, it might look like this. I would head back down. And that's a failure. This is a 1, 2, 3. 3 looked okay until it dipped low, and then 4, if it's weak, is done. It's dunsies. It's going down, you know. It's that simple. And then you're looking at low targets. And, you know, again, this depends on when you get there, I suppose. But I would say 280s is likely. This is not different in some regards than the others we just looked at. If you look at that first drop, that's been a big key indicator for us on the others as well. That first drop seems to be the target zone for bears, or just below that, perhaps making like a kind of spring action. It may surprise some folks, you know. We may actually see it happen. Now that I'm staring at this, if that does occur, let me clean this up for a minute. That we may actually see this happen before market close, which I think would surprise some people. Yeah. I mean, I'd be a little bit surprised if we went through all this garbage and then had it happen before market close. It'd be interesting. So this would be like a shrinking to the upside. And then if you break down, you go into a series of drops. Maybe not that quickly, but whatever. You go into a series of drops that like back test. I don't know if you'd have to make like a new low at some point. It looks a lot like that March 2022 setup. And then you come low. You probably have some pretty extreme like volatility here just after like lunch. Yeah, I don't see why you couldn't just wait. I mean, it could pretty easy to like stretch this out to the end of the day. Like this. That's the end of the day right there. I mean, you could probably pretty easily do it. I might be able to find some evidence that it goes before then. But then your 50-50 is actually really simple here, because it'd be from wherever that low is to 50-50 up above. This guy probably just goes right back. I bet you it's right from that gap zone. It's closed right here. Yeah, dude, they're totally trying to get back to that 505 top. I think I've said that like 10 times in the last couple of days, because I was like looking at this yesterday. I said, you know, that really would be the last stop. Somebody wants to go back there for sure. It's constantly in the sights of and the minds of the operators here. They're leaving like footprints everywhere. That's where they're walking. Yeah, it may get there an hour before close. I'm starting to see that now. We had this marker here. We didn't ever check it. That was a mistake for bulls. Bull operators would have gone back and tested that. They wouldn't leave it open. I think this is going to hit the low right about 1 hour, at like exactly 1 hour before close, I think. So what we're doing right now is we're establishing the 50% marker for this this walk down. We're really fighting it. It's the stock market, you know. If you see something like this, it could be very like straightforward. There it is, and then you just don't get it. Like just like the upside target we saw the other day. We had those targets triangulated, and you're like, well, that looks great. Yeah, but I mentioned if it's not the high, it's probably a pivot. Well, a pivot would be like a 50-50, right? Like that's where you're going to have a wave pivot right here. Well, guess what? Looking at it now, it's like going from the gap or the gap level down. It's like, yeah, that's right there. An hour before close on Friday, you can walk down that way. This seems to be the direction that's being tried and tested. And so it's like, yeah, this is really setting up pretty nicely for an SOS right here above the 50% mark. So drive low, get a spring, and then SOS 50% mark is up here. And I think it'll be Monday. So this is in the right spot. If that does happen, though, and they do go low, and that would be unlike what happened here. If this does happen, and it may, that they go back down to 505 today, I would expect there to be kind of like another covering event and it could lead to kind of like we may go down low, but we may actually end the day at near zero. So market would have like a recovery bounce. It wouldn't be over. But that recovery is really important because if it leads back up to 543, it gives you an opportunity without going like a little too crazy on this. It gives you an opportunity to, so let's say this happened right here and you have this end of the day squeeze event. Like really fast move back up over the top. This is bullish as heck. Like I'd be all over this. If this happens, I'd be like, yep, that's ready to go. Because this to me would be like, oh, we're going down, trying to create a phase B bottom. And you drop through and then you come back up to the top. Bullish is all get out. And then if that were to be the case, I'd be 100% for like a move going into Monday. I think you'd see a pretty big move. After that point in time, you need to have a reaccumulation. So it may be a bit of a boring Monday at first, but you'd have a reaccumulation. And the thing is we talked about this it wouldn't maybe not be that long, but that's too long. Because I think that this particular marker is still at play. If I'm wrong, I'm probably off by like a couple hours. So we had already established yesterday that this was where that channel goes. I don't think it's wrong. This would be like a spring action to get you back through. That's a huge move. That's like 600, which is insane. So to think you would do that in one day may be a little bit crazy. But like I said, you have this idea that there's a reactionary move up. You could space it out farther for sure, or you could just not go as high. That's a given. I would have preferred, I suppose, to see that second squeeze move today or yesterday and then come back down and land on top, which is what I had over here. But it's looking more and more possible that bears might win out what they want to do here, which is to get out of some of their trades, just volume-wise. So this is, again, pretty universally what we're seeing across every stock right now in the market. This is not exclusive to, except for like GME, which I think was front running. So I think GME already did this kind of motion early on. And now I'm not so sure. It's already kind of at the place where it needed to be. It's really close. If it's a couple dollars off, but as a pivot, that's not really a great pivot. I mean, it is a low here, but there's not much else to it. Kind of getting a narrowing now. To me, it looks like it may just finish the narrowing. I wish I had an answer. I wish I had a really strong answer. The only real answer I have is this 521 holds. It's probably going to just chop here until it breaks. If it doesn't hold, I think it's going to go ahead and head low and go for a liquidity dive down south to 505. We may see that early break. That'd be fun. I'd rather have that today. I hate this little pinch, but if I were looking at the volume, I don't know, man. It's just not clear. This looks like bearish as heck to me. This early advancement has to be met with a second advancement that just breaks it. You cannot go to a new low now after you make that advancement. That would be a pretty surefire 1-2 flush type move. Well, here's the good news. I think we're going to know before noon. I mean, I don't see why we wouldn't. Well, actually, no, not noon, like noon Eastern time. So within an hour, we'll know. It won't just go sideways through that. If it's already squeezing, it's squeezing, man. I haven't really looked at HYMC in like a year. I don't know why it would have done so poorly, except that it had ties to AMC, because It's like a mining company. I mean, I think precious metals have been doing pretty well. So it would be odd to me to see it continue to have the same kind of crap that AMC deals with. If it weren't just for the fact that they bought it, I think it would be fine, just in terms of fundamentals. I don't know, man. This is weird stuff with you're like, AMC ruined it. Well, we didn't even know about it. Most people didn't even know about that company until AMC bought it. So, I mean, you say they ruined it, but I didn't really do anything to it. I don't know why I said that. Just talking. Just talking. This is kind of interesting because this measurement suggests that we get there pretty early if we go down. This is usually a pretty good one for a middle, which is where the breakout is on the second ear. And then two trajectories here matter, and they matter a lot. And they're not going to look like they matter until they do, and then you're going to be like, oh, they really mattered. That's how confident I am they're going to make an impact here. One is from the bottom to the first ear, and one is from the bottom to the second ear, all within the second cat ear, which is after the jump happens. So there's an advancement here, and then there's a jump that happens. And the jump happened first thing, I think, this morning here, that pump up over. So you see how it resisted the creek? This might be a little tricky to see. I'm going to zoom in a bit. But you can see here right around 523, SPY was resisting the creek. So I had set up on top of it yesterday. That's the cat ear creek from early in the day. I marked it off. I left it on the chart because it's going to be important. It's always like a little bitty double ear wick or something. It's almost like nothing, and we usually retreat away from it, but it becomes like a wave point later. Like we're going to go back and anchor to it. It's always a little tricky to triangulate it, but usually, and this would have worked yesterday, usually there's a drop zone, and like if you go across from the drop zone right here, and you see that creek intersection, if it's pretty strong, this is going to be a reaction to it. If it's not that strong, it ends up being like the bottom of the wave, and then you have to like double the value. Why is it one or the other? I don't know. It just is. I tried to figure out why a long time ago. At this point, like about a year ago, I couldn't really figure it out. There wasn't like a clear, obvious reason why sometimes it's a pivot and sometimes it's definitely triangulated. But this is usually very accurate. Do we have something like this on AMC we can use? Yeah, and it's been pointing to February, for the most part, February 2026. And then on the big picture, this is still what we're seeing on the larger picture for SPY, and et cetera, we're seeing that as well. So this is definitely something that you can use on the big picture. When you look at a creek right here and you say, well, where is it supposed to kind of intersect? Well, you would say like it's possible this could be intersecting over here by April 21st, coming back up to 550. There's more than one zone that you can use, and there's certainly more than one way to do it. For some stocks, they actually have multiple ones because they have two different creeks right here. One is like steeper than the other, one's wider. It can make it a little bit tricky. But you would suggest that that's a pretty safe buy if you get like an option contract down bottom and it's suggesting 550 by end of April. It's not like guaranteed, but it's a high probability, in my opinion, that that's very likely going to happen. Now, the rest of these are very extreme positions. So what do you make of that? Well, it could be both. I don't see why you couldn't hit one and then go to the other. It's not an either or, kind of thing. This is typically like pretty useful though. So I kept that on the chart. Nice little tip for me about charting. If you see that drop down and you have cat ears, just look at where the ledge is and see where that intersection is. Again, if you're here, that's too early. In this case, it was more like associated with the bottom. Now it's pretty close, but that range, pretty close. Okay. The disparity. All right, what was I doing? I'm trying to give us some real answers here. So from the bottom up, these waves tend to be pretty accurate for final upside off of a bottom. So I'm going to use this low, and let's pick a different color because I got a lot of like yellow and orange on here, and it's not really helping me visually to see anything. I wish the blues were different. You guys are like, that's a typical artist for you. Focusing on things that don't matter. Yeah, I know. I know it doesn't matter, but it matters to me. I just wish there was like one more blue. I think you can customize some colors on there, but I never do it. They weren't actually mining until just setting up. Yeah, maybe. So these two markers are very, very important in the future. We're going to see what we can see with those. So I've got a couple potential like termination points today. Since we had these as like middles, and we think these might be pivots because of the nature of like what happened, it didn't get there at that time. This might be like a low pivot. It would be safe to assume this could be like a middle of a bottom, which is what we're kind of making a case for right now. So I said it when it happened, but I was like hopeful, obviously, that it was just going to go because it looked super strong. I think, again, I underestimated how many actual bears are in this. But this would be like the middle of the bottom as a pivot. I'm not going to keep the rest of these on the chart, so I'm going to move them over. We'll keep one. I'm going to use this one, and then we'll leave these over here. I'm going to move them over because I think the timing's a little different. So then what I want to do is look at where do these final intersections lie. So let's make this into an orange marker because it's like a pivot, and then I'm okay with that one being where it is. I'm just going to clear up some stuff. So do these match anything that we see? That one does. That's a pretty strong intersection right there. That is today at 1500. You know, that would make sense because of the way I drew this. But I was thinking about 50/50s, and it's weird to me that that hit here. I wonder if this does drop again, I wonder if it goes down pretty quick and we hit like a low and then break out earlier in the day and have like a run up back to the gap. This actually follows kind of a Franken model of what I did earlier, because then you could drop back down and it's just a push on the resistance, and you could slide back into day. You pretty much end flat. You'd end up like 1%, but you'd be coming back to retest this top in time for Monday. And that would be pretty strong too for the case of swing further. Yeah, that makes it to the second target really well, which is up here at 560. So target 1 could be the peak of the first move, and then target 2 is a Monday move, which continues the Friday move. And that's in the right spot. I don't know. The window is closing pretty rapidly, so I think we're going to know really soon. So if it goes down, I'm going to be personally, you guys do whatever you want to do today, but I'm going to be placing my bets on upside because I think we're going to see that reactionary move going into Monday. We may even get a squeeze in the day, even if it does go pretty low. Is there any other evidence of down right now? I need like a 1 minute chart. There's not enough detail. Yeah, we eked below it, but just like by the hair. I mean, right there. It's not really that much. And this could be like a flush up and a flush down, so it could just break out. All right, well, the easiest way to do this, I'm going to add an alert at 5, let's just do 529.60. That would let me know if it's going up above the top of the range here. That would be a pretty strong signal potentially. That's really like a breakout zone. And then I'll put an alert right below this one at 520. That'll let me know if it's coming back down to go back. And until that point, I don't think there's much else to kind of debate. So let me see if I can count them. Let's see. Well, Booksy, if this is the middle, I hate that first assessment comes back to my head again. The first assessment was the one that I had on the chart earlier, which is like it's starting to look really similar, which is you come up, down, and then you break out, but you don't actually leave. You just SOS, and then you kind of back up and you wait. And I still think that could be a wait till Monday kind of thing. So what that is an advancement high that just push resistance, and it lets you know it's bullish. But this is just a middle cat ear. This is just like a squeeze in the middle, and then this is the resulting ear. And we could actually probably figure that out if it's going to happen. We would just take a trend from the bottom to the top here. I think that's likely where it goes if it does just break out. So then you could have a pump up. It comes above the top and retreats. Timing on that one's different because in order for this to hold, that wick that was made has to be tested. This is like a really good bear trap if this happens this way, as opposed to kind of letting them get out. This would be really effective because this looked distributive to me. Remember? I said, it looks kind of distributive. This is that up thrust. We just have to wait and see what happens down bottom. If it goes back up again, it's definitely like a bear trap. Because I think bears are looking at this. I'm 100% sure that they're looking at 509 and down to 505. Like they want that zone. So is this going to be like a second up thrust, like a UTAD kind of motion? You've been saying that since $7. Oh, Wolf. Yeah. Wolf, Vanguard bought like several 100,000 shares of Wolf. So, but I'd be careful about that because a lot of times those are like distress funds and they're multi-purposed. So just keep that in mind. Yeah, so this could still be like a head fake. I'm not going to call it yet. It would make sense to try again and then come back and see if you can find support. All right, so this is what happens if it dumps. If it runs, probably doesn't do it from right there. Probably backs up and then holds and then runs. It's still just compression right now in this little spot. Nothing's really happened yet. So we're just waiting. If it pops, I think it's going to go over the top. It may wait till the last second. Who knows? Go over the top this afternoon. And then drop back to retest this marker. I guess it could be multi-legged, like a 1, 2, 3, but I don't know. I don't think it really matters that much, to be honest. We're going to find out pretty soon. Could it be both? Could this rip to the upside and then dump all the way down? I mean, it could. I really hope it doesn't do that because that would really stink. But let's try the timing for this if this is a middle break instead of a downward motion. Every M could be a break up or a break down. Ah, it is holding right there. I was wondering about that. I was looking at this like there should be another line because it didn't even have like a full like re-break of that. There's another one right there. Yeah, I don't know. Didn't really check it. Okay. Anyways, I'm trying to find a middle. That's why I was doing that. And I'm actually going to use this one for going up because it jumped over the creek here and started a new setup. As opposed to just a big wave up down, which will return back to the same zone. This one would be like change of direction. So we want to use the second one. Well, this is exactly 50-50 to Monday. So that seems pretty rigid. So it looks to me like the bulls are trying to work it out from that perspective. So if you have a compression here, you'd have like an expansion, and then you'd come back down. It doesn't mean that you have to land on this top, but it'd be pretty straightforward. I keep saying 5. I said it earlier. I think that might be where we close today, 531. It almost doesn't make any difference which direction you go here because it seems like the outcome would be much the same. I got to be honest. I don't know what I'd prefer. I guess down here it just kind of ripped and then dropped. So I'm wondering if we see something like that where it does like a build out and then it runs up and then dumps. I almost don't want to see that. I feel like that'd be really painful for a lot of people. You would come up and like SOS and then pop probably to gap fill or something and then just slowly churn backwards. Why would you gap fill already? Maybe get close to it, and then it just kind of walks back. The back up there is pretty important. Let's see where it was coming from, though. So when it broke out over here, it peaked above finally. That's like making the new high, which really for us is just barely above here. We don't need to go any farther. So even building out beneath it and just like breaking above it would technically be enough. But then we look backwards and we say, well, it's that level. It's the same thing. It's the same zone. It's 528. And then it backs up. So let's see what that measured out to. So if I'm right, there should be like a midway point. It did measure from the bottom. But that really measures to the top, which actually makes sense if that's the finishing wave. It's just so ridiculously high. Gosh almighty. Look at that, man. It's right there. This is why I was marking off this chart like I was. Like there should be a marker there that indicates where you're going to go on that pop. It's always there. Hmm. So you ready to say it's going up, Booksy? No. Because this should be like a 1-2 that crosses over, and then 3-4 would have to settle in here. And I think then you could make a good call out. But if it's just up thrusting through here right now, I mean, it's trying to set up in a camp, but this is how distribution works anyways. A UTAD, for example. There's no weakness here. It just keeps making higher lows. So you can't really argue that the bottoms are weak. They're not that weak. The only thing I can see is it tried to dip below that trend here. That's the only thing I can suggest to you may have been like a bearish move and then the up thrust. But those all could be part of a trap. If the idea is to trap shorts, then they're not going to let them go back. This is letting them out. So it's a battle. This lets them all out. This prevents them from being able to do so. And the squeeze would continue as we would originally have expected, which is to not, to kind of rebuild and then go again immediately. Have a huge green day. I'm skeptical because even this bullish measure does seem to suggest you wouldn't necessarily go up all today, kind of bleeds into Monday. There's not really a lot of evidence here that it would have to go all the way up today. But I guess if it went up to 565 today, I don't think anyone would be mad at me. They'd probably just say, yeah, all right, so you were kind of right, kind of wrong. I'm thinking that there's got to be a pump here and then a retrace. So we may would set up. Let me set up this way. Well, I don't really think we need to go that far. Just back up and go. It's like super simple. I don't know why you would just chill out here. I feel like you just race up after that. I'm trying to make an argument like I was earlier that you could come up and just chill out, but I don't know, it'd be hard to do it if you broke out here. It'd be really hard to just sit there, other than just a compression for 4 hours. Like, I don't know what you would do, because it's like once you make the advancement, you're going. There's nothing else to it, You make the sign of strength, you back up. The rest of it's just history. You usually just go. So it'd be weird to just chill out and have like a super long SOS. All right. Well, I've done enough measuring. I'm just gonna leave the measurements as they are. And instead of making this like overly complex, let's just make it really simple. Because I think there's a couple different possibilities here for run-ups. But I do think they're all pretty straightforward. And the motions themselves have slight differences, but they're all kind of the same motion to me. I'm like, yeah, spring motion could look like two different things, depending on how long you spend. And then bull motion really doesn't look that different to me either. It's the sideways that throws you off. The sideways is super obnoxious. It's usually right on a Friday. You usually just chill. But a bullish Friday would give you a really good excuse for a bullish Monday. Like I said, I think there's opportunity there if you rip the stock market a little bit more and people buy back in Monday. It'd be easy to get a good rally going if you have like a bullish Friday. So what I want to see is so yeah, I'm not sending it yet. Like I said, I think you have to be careful with the these kind of moves up, especially if it's already done it once and pulled the rug. Just gotta watch it. And looks okay. RSI is broken out on the 1 minute, which is really small time frame. I should get back to like the 3 or 6. Also help with the clutter. Oh man, squeezy squeeze. Yeah, I think regardless, it's kind of unavoidable. I think you have to have some kind of a buy-in here. I'm looking at where they've marked it off previously, like where our market has made those moves. If it breaks above, it doesn't really matter when it happens. In my opinion, I think it has to have, it has to have that backup to that little gold zone, which is around where we are now, which is like 526. So break here could lead to a big pop and could lead to a new high that we didn't see yesterday after that drawdown. Maybe even coming above 532, like we mentioned previously. But I would be genuinely surprised if we didn't come back and hit that top, which if you're triangulating all that would be around 2 o'clock Eastern time if it were to do that. So if it comes up, I think we'll pop to like 530, maybe 534, that zone, come back down to 526 or something along those lines, and then excuse me, probably just take off. One heck of a Friday if that happened. If we look backwards on it, you can kind of see why that would be the case. But what I'd like to do, and I tried to do it earlier, I just kind of lost my focus. So I'd like to really triangulate this and get a good feel for it. And GME is already going back up pretty decently. It does look like it's kind of rising into a wedge. But it's a lot closer to its target than a lot of the others. AMC, same deal. This is still dangerous. I said if it comes up again, it might try. It could still be bearish. So I don't know what they're doing right now. Trying to like get people to buy in, or are they really going to start squeezing? Because this doesn't really look like it's jumping to me. I guess if it holds here and then it goes, maybe in pretty good shape. And if it drops and then hooks, holds above 291, 290. Yeah. Well, it's the moment anyways of truth. Because this is what we were talking about with the M stuff, saying like really simply, like at the end of the day, this is a compression. And this only ever ends in like one of two ways. You break out in an S curve, which is what happened down here. So if you're looking for an example of that, is like once it starts the M shapes up, it can break out and just do the S curve. And in our case, there's a plenty of space above to still have a green Friday without going. I mean, you could hit 540 and stop. You could hit the gap fill at 520 and 42 and stop, excuse me. You really could advance just above 535 and pull back and like hold it. There's a lot of things. There's too many questions about that. So I can't say it's just going to run. It could, like it did here, have some kind of a quick move up, down, and then just go. And that's what I was saying. I think once you make that point, there is an argument here that you just kind of take off and you have some kind of massive Friday move. And even if it just pumps up to 550, I mean, I don't know why I wouldn't just start squeezing. That's what I'm trying to say. Like, such a strange thing. I think your bears are going to have to try really to avoid that. So they may use this as like a top temporarily and just drive the price back down just to try to avoid more chaos. I can't imagine once it hits that level, that threshold, it doesn't just rip, because I don't know why it wouldn't. It doesn't make sense. If you get above 545, I think it just goes all the way up. Just melts up. Because there'd still be a lot of people stuck in the play here. But, you know, from an S-curve perspective, it doesn't necessarily go way beyond, you know, the 540 area. So, I don't know. That'd be a good Friday. I think you'd have a nice pump. You get people excited, and then you can bring the price back down. So it just kind of falls in line with what I already had. You bring the price back down to 532, and then that's it for the week. And then you end the week green, and Monday you're in a pretty strong position. You've made the advancement. You just have to pop above 545, and then you're good to go. You're already in a good spot to potentially just rock it. It's sort of like a slower model of what we saw back here. Yeah, 1, 2, and then pull back, go. And then downside, even though it may not seem like that's possible, downside could still happen because this compression could end in a bit of grief. It doesn't look like it's going that way right now. It had the second motion up and it held support. Had a third motion up, and it's certainly holding it right now, so it's pushed the creek again. But if it were to go and reverse all of a sudden and come back beneath 523, and I'm going to hold that level, I'm going to pull my alert up. I think that's a bearish signal that it could be reversing backwards. So you hit that marker, it goes right back down. I think you're in a capitulation zone going all the way back down to 505. Otherwise, this is it, man. I'm thinking it's looking good. So, 505 is not there. It's not there yet. The M, like I've overstated it today. I've said it way too much. I'm trying to stress that I strongly believe that bears are trying to get down to about 507 to 505. I don't know if they're going to be successful in doing so. In order to do so, they have to kind of drive a distribution here where we are, because if they allow it to, and this is where I'm kind of getting to, is if they allow it to come back above 529.60, that reads to me more like a sign of strength, especially if it comes above decently to like 530.34 or thereabouts. Specifically, it's like 533.50. But so you've got a couple levels here that would be very bullish. And I think in the event that it does that, there will be an effort to drive the price down one more time back to 526. That would be the big buy-in moment. It may not succeed. I have to just warn you, like, it may not completely succeed in getting all the way down there, because what's really being tested is kind of right above that, but it's that zone. I know that's kind of confusing. It's just that zone right there at like 527. So for me, I don't really see a benefit in even making that call out, because if I believe in my own TA about it, it doesn't just take off and go. I think it's almost necessary to make that bounce here and then come back down And that would be the place that it'd be like, yeah, it's probably never going to come back down here again if it holds that support and breaks the creek. It should go up, and then the lowest it would come back to would be the previous top zone, which will be around 534. So we're talking about essentially a break here at 528, pushing up to near, my hope would be pushing up to near 534, because I think that would demonstrate a lot of strength. It could be a little weaker, so just keep that in mind. The only real requirement is above 530 basically. So there's a $4 window. It's huge. And then coming back down, you just want to hold 526, breaking out again. I would like to see it kind of finish this wave. And the measurement there is fairly tight, and it would be near the end of the day, like the last hour of the day. It might be up at like 545 or 543, maybe to get the gap fill. But I don't guarantee that, because in practice, this is not, it's not like 100% necessary. There's things that in the market I think you can get away with as long as it's bullish. You don't have to hit like the highest possible target. So I'm thinking that's about right, but we may go ahead and go for the gap fill. And then I think that the price ends at like 532. This is no different. I actually think that if it goes down, the price ends at 532. Part of me wants it to go down at this point because the calls that I got anyways really didn't budge. I mean, like, there wasn't much to it, I bought in really low. I had an amazing, chart moment, I guess. I was really grateful for it, and I bought what I thought was going to be a really good contract, but it didn't. It didn't amount to anything because the volatility is so high. In fact, they're actually down. They're below the price I bought them at now. So it just goes to show, like, this market is absolutely favoring bears right now. Beyond a shadow of a doubt, it's favoring bears right now. So if the market, it doesn't make any sense to me because we had the biggest move ever, and then you pull back a little bit and it's like everything crashes, the opposite way. It's like, really? Okay. So it would take some convincing, I think, for the bulls to start really, or I would say the bears in this case, start capitulating more. But yeah, I mean, wave-wise, nothing's changed from yesterday. When we look at the bigger wave picture here, there's no difference. The structure is such that this could end up being at 600 by next week. It sounds insane, but it could be. And then it also seems very likely that 564 and 583 are at some point important targets. I'm going to just say, as a word of caution, right? And I've said this before, I'm not 1,000% sure about this 600. And part of me is wondering if that's kind of a temporary trap that's the real trap for bears. But we'll just have to kind of wait it out. I know it doesn't make you feel better, but it's like just one of those back of the mind things, like, 600 is pretty darn high. I don't think you need to go that high to retest certain things, so I find it to be an extreme target. It's there, I almost don't believe it. I think you'd have to have news about China to make that happen. Like, I don't see how that could happen. Even in a squeeze event, I don't see how it could happen. I'm more inclined to think that there's a pressure point here, like it pushes up to 562 or 561, and then we may very well retreat after that. What I mean by retreat is that you start forming out like a larger channel. So you pump up to the high that you're going to hit, and then we retreat back down to maybe next week to like 527 again. And perhaps that's the trick of this is these trajectories are really early trajectories. We're not going to see like a continuous squeeze, and ultimately we will maybe get there, but we have to do kind of the same thing we're seeing on this micro right now. We're going to have to do that on like a bigger picture and compress into the end of April. The market being uncertain doesn't really help that, does it? You certainly could see why that's a viable alternative here. Because you have to imagine, if we hit 566, I'm going kind of out there now, but if we hit the 566 mark, it generates like a new trend, wherever that may be. It's easy to see how like a backup then needs to come down pretty low. If you look at where this push went, I think that backup triangulates over here to this other trend, which is, the support we have underneath us. It triangulates to April 17th. So a wave break here that's 50-50, I know it's hard to see, there's all that junk on the chart right now, but a wave break here that's 50-50 certainly would go as high as that. I mean, we'd go up to, 568, something like that, which is some of the targets we got on the lower channel, whereas the higher marks were really high, right? The 583 is kind of like right in the between those two targets. But I think that's just because that's the zone. There's like a 1, 2, 3. It's like we want to get back to the 583, but then there's kind of an equal parts percentage above and below it. And that's giving us the 560 mark and then the 650 mark, the $20 range above and below. And I think we're getting all three of them. Like the market is undecided about how far it's going to go, how much strength it has maybe, and what a squeeze might result in, for example. And so I think that lower mark is like the safe one. 583 is probably my favorite, but I'm wondering if it's kind of a delayed action like we saw here. Because what happened here was we had this push up that looked like it was just going to go, and then it retreats away, and then it might go later. We may see that. Like we may see this kind of like push up here that goes to just the lowest, and then it retreats back down and chills out a bit. So we're thinking it's going to be really fast, and it's kind of a long-winded unwinding. I mean, it's pretty long-winded. And we could get a pump later that goes to, whatever the target is. So I'm kind of curious about that now. But look more and more like a sort of a chill day. We might get a big pop up to 540, but then beyond that, I'm not so sure. And I'm starting to kind of believe more and more that if this is going to go parabolic, it's got to go like now. I would want to see it break way up. I think if we hit 564 today and backed up to 540, that'd be something else. Like that'd definitely be a different situation. I think that could be like a big 1-2 that then propels us up. But if we just chill out, I'm inclined to think we only hit 564 and then back up quite a bit. I think this is the fan that's been created right here for space and for a window to trade. Kind of makes sense because if you ended the day around the 530 mark or 532 mark, that'd be a really good place to back up to. It looks exactly like what the small chart looks like. And then it'd just be chopping underneath 550 for like a week. Then one more push. Go as high as you can go kind of thing. And then it's probably done. It does follow that might be the case. Maybe Monday is really, really good, and then it starts showing signs of, we don't know, like some people say it goes up, some people say it goes down. And then it ultimately Tuesday going into Wednesday could be pretty bloody days. It does kind of make sense because in the grand scheme of things, if you're generating a channel, you got to pick some kind of a trend, like a wave. And this is a good contender. This was the lower one. It does look like a window into Monday, doesn't it? So we may get part of the way today and then kind of build out 530s and then go Monday. I think this might lend itself to a larger setup, which is kind of a whole nother story, but and this usually represents like the downward mark, which actually looks correct. You see that triangulation? What about the beak? The beak is a very unique thing. It really doesn't happen that often. I would not say that it's a very common occurrence. It's a parabolic kind of compression move. It's like a rising wedge, but it's more of like parabolic, like an arc. It looks like it's gonna go, guys. It's just one of those things that I'm just not. This is one of the spots where I'm always like this. It doesn't matter if there's a squeeze going on or not. If we're in the middle of a cat ear, like I have to see it make that break and hold that support. Otherwise, I'm not in. So I will be back absolutely trading this if it comes back. If it breaks out here and it holds above that 527 zone, or that 527 zone is super important where we're at right now. Looks like it's going to break. A short-term swing trade might yield some good results from a breakout here, but I wouldn't hold it way past, if it gets up to like 530.30, I would not. So I wish I could tell you how to capitalize on this swing, but I just got to be. I'm skeptical of it. I don't know what calls would be good here because nothing's really moving according to my expectations. So I don't know. How would you all trade this? Aside from just, nah, it's good. Yeah, it might. It might just go bankrupt, you know? Maybe just be done. gonna be a boring day. Just gotta resist the urge to get in too soon. It's over. I mean, it's over that creek. So I think it's gonna pop above 530, but it might be kind of the end of it for now. I might just trade like a short-term position pop and see if it holds. Still having trouble. We're not getting over this top yet. I'm hungry. Just sitting here watching this clock tick. Tesla, what are you doing? Yeah, Tesla came back down. It kind of took the other route, didn't it? It's interesting. Tesla looked good to me, man. I like that. Looks good. Go eat. Yeah. No, I think this move may not be finished. I mean, if it holds above here and pushes, there'd be like a temporary backup, but it already did one. So I don't know. I don't know why it would do like another unless it's going to dump it. You could do this and then come rock it because that would be like a shakeout. That could have a little sign of weakness that points to a later move when you come back down. I just don't know why you wouldn't go over the top unless it's bearish. It's gonna dump the other way. You know, that's the only thing I can think of. But like, look at where Tesla is. This doesn't really look like a position of extreme weakness. Like you could have it drop again, but that's clearly to me like an iterative motion. This is almost identical to what we doodled on SPY earlier with the chop down, like rolling it down. So pretty much exactly the same. And I mean, in this particular case, with Tesla, if that were to be the case, like I would be again looking at this as a series of ramps. Monday, it's right there. I'd be looking at this as like a series of ramps. So I'd be looking for that SOS. And it already came up above, but like a 50-50 kind of thing. So yeah, I could still come down pretty low. I've seen this before. So here's the buy-in on Tesla. Could it be happening right now? Yeah, if this is a LPS, it looks a little bit more like a what we call like a phase B bottom. And what that means is that there's probably going to be like another pump here. And it would make sense if SPY pumps, because SPY could pump up here one more time, drive the price up to high. If SPY gets the pump, it actually makes perfect sense, because if SPY gets the pump, Tesla and all the other whatever stocks go with it. And you look at the setup there, if it can get that SOW right here, like, oh, there's a weakness there, then it pumps up. It doesn't even really have to come that high. I have it going way up. It could just come right up to like 531 and just go slightly above that. Even that's enough to kind of say, yeah, we're gonna push resistance. Just needs to start pushing resistance, but specifically over the top at 530. So get a little sign of weakness here, and then rip to the upside. Tesla does a little bit of the same, dips down, rips to the upside. But this is just a widening, and it's like what we talked about on AMC, that reversal move puts it in a really good spot, because then what you could have is like a distributive action. While SPY is coming back down to go to 527, Tesla's actually going to, if that were to happen that way, I guess we have to wait and see. It looks like it's reversing pretty hard. But we'll see, because it could come back to retest any number of these creeks, right? That's a really deep push down. It's got to be some kind of Frankenberger of like the other garbage that I looked at earlier. Yeah, I don't know. It shouldn't be coming down that deep. Did this early, like yesterday too, and it was like both, or the day before yesterday. It was like, oh, it's kind of doing both. Anyways, I'll just finish the thought. So this would be like a phase B bottom, like a double bottom or something, and then it rips up, and you have like a distributive action right here, and then you drive the price back down, and it's really just the between the ears. This is ear one. This looks like it could be ear two, but if that's an S curve, I guess it just goes down. But the secondary distribution does happen. If it just goes down, it just goes down. Whatever. But I think it's going to reverse. I'm just going to go ahead and say I think that's what happens. And if I'm wrong, I'm wrong. We'll be wrong. You guys are like, no, Booksy. We're only right together. We're never wrong together. I think this is a little local SOW, and then probably points to wherever you want to go later. So this may end up looking like a pretty low hit. I come down pretty far, but not quite below the bottom. And then, yeah, I'm buying that. And then, like, I'm thinking that's right. And then there's a Gosh, did SPY just like tear backwards towards the other marker though? Is this just like a big old head fake and then it drives back? Or can it maintain the level? I feel like I could do both, but yeah, I think this rips back up. It breaks out, but it's a temporary breakout. And then we go backwards after we kind of pump up here. So there is an advancement that tries to get over 249.50. I don't know if it'll get there, but it'll get close. And then it distributes, and then it's kind of sucker punch to the bulls, because then it comes right back down, and it 50-50s through this ledge at 244. It's usually like anchored on something, and that's right where it needs to be. That's the hit. I'm going to walk down to the 237 mark. And then when it leaves, you actually leave via this blue line. So it's kind of weird because I'm not sure how fast it would have to go or where it may go to up here. It may not go as high as I'm expecting it to. Because if it needs to create a creek, there should be a creek intersection. Maybe it's already there. Like there's always a triangulation. Yeah, never mind. That's probably right. This is the zone right here. It'll head up towards 249. I think there's a trade about to happen. And then it's going to pump it up and then drop it. I think that's very likely. So pump it up, drop it, and then when it leaves, it'll make two really important checks on the way out. One will be this kind of blue trend, and I'm going to do my best to make sure it's actually correct. I'm kind of fudging it a lot. I want to make sure it's actually right. It looks really low. It's really low when I do it that way. It's like super low. See, that one's not very helpful then, is it? I'm looking for like the center though, not the bottom. I don't want the bottom of that. I want the center of it. And I think you're going to go back to this guy right here. Because the center would be like where the middle of it's almost like a triangle shape falling. And you're trying to find the center of the triangle. And you can see right there, it's dipping below. There's a bottom, but there's also like a middle that's trying to hold. But I can't quite put my finger on it, so I may have to give up if I can't figure it out. That actually looks pretty close. That might be the right one. Back to this support, and then this is rejection, true rejection. Yeah, and then this is a rejection off of that. I mean, in an LPS scenario, this just comes up and then holds the support right here at like 243. But in a spring scenario, this is where you get the phase B bottom. So you basically just made like a phase B bottom, and then you get the push up before the spring, which is what I've been trying to argue happens on AMC. This is the same motion. It's that rounding motion. I've been talking about this on AMC pretty much every single day. That I think there's going to be a big push up, and this is what I mean. It's like, yeah, I could just drop, and maybe it just hooks here and then it dumps. I mean, it's possible. But it may be a much more effective spring motion and it probably would be more violent anyways, if you actually break this trend a little early, you get the run up, but you don't break the second creek, which is out farther. That gives it a different feel because you would think that it's going to run, and it may very well like come close to advancing even. Look like it's going to go. And it is a sign of strength because it punches over this top. So it's like, yeah, we're ready to go, right? But then they do a big rug pull and drive the price back down. And usually this guy ends up being like a 50-50 anchor, which is why I marked it off like right here. It's like the last little ledge. So if it does this, cool. If it doesn't, I'm going to do a trust me bro moment because I know this has happened more than a couple times. I think that's where we go. I think we're going to go back up there. And then when we leave, so this is where it hooks, if it's going to hook early, because this is where that that other ice is right there and the other trend. So this is kind of the sticky point. I always call it like a sticky spot that once you get past it, you kind of just go poof. But once you leave, then you actually break back down through this. And that could take a while. I mean, based on this setup, it could take a while. I don't think this spring ever, or this trend ever gets checked again on Tesla. Yep. There it is. So that was the backup. A little bit of a weakness there. But notice it came back down. Came back down pretty far. Dang, got that one right on the nose. So it's got to get over the top here. It made the poppy noise because I put the marker on there, which means it did come over the top, I think. I think it had to come over the top to hit that marker. So Tesla goes up. SPY goes up. No. No. No, we're not. I mean, we are and we're not at the same time. Like, they're missing some pretty big motions here, I think. I think this is going to pump, like I said, maybe above 530 if we're fortunate. But it doesn't really have to. All we have to do is make a higher high. We already did that. So, checkbox, okay? I don't use emojis or anything, but I guess if there was a checkbox emoji, I would put it here. Like, right here. Like, check. Jeez. Why is it so big? It's huge. It was a gigantic checkbox. That's a checkbox. This pump right here, I think would be strongest if it came up high to like 530s. And I think same with Tesla. It would be strongest if it came up higher, but you know, whatever. So Tesla's going to go up, I think, to around maybe 250. That's possible if it can continue this move. This is a big like squeeze moment, like in a tiny time frame, okay? And then you rock it up, and then you're going to slump really hard backwards. I don't think it has to be news driven. I think it's just a sell down, right? And once it drops back beneath, then you're going to have like a double cross down. This is where the ears come into play because the wave down is a 50-50, but now you have like an ice level, and then you break through that and you have like the 50% level. And this is where you get like that really weird looking cat ear kind of middle. It's always like in the right spot. Then Tesla goes all the way down to 237. If it springs. If it doesn't spring, it wouldn't come back below 243. That's the only other place, or right here. It's really low. I mean, it'd have to still come way back. It'd have to come all the way back down to here. So it almost doesn't matter, right? Because it's like, well, it's going to come back down. The S&P 500 does the same thing. It goes higher though, because this is like two different models of the same thing. I'm so happy we get to see both. You guys are like, really? No, really, it's cool because it's really cool to see both. When you see the breakdown version versus the breakout version, it might seem like they're two completely different things, like where one of them is going to drop forever and one's going to run forever. But actually, this is really cool. This is a super cool example because we're getting to see both. And I was drawing both this morning, like, I don't know which is going to happen, but for liquidity purposes, Tesla looks like it's trying to do the spring. SPY doesn't seem to need it, so it may not do it at all. And I don't think it will if it's going to go up. So we've got a really nice push here to the upside. I'm thinking, again, the goal would be to try to get above this top. If it doesn't get above this top, it just kind of leaves like a confirmation unconfirmed. I mean, it just sort of means that we haven't made the advancement yet. I don't know why you would do that. unless I don't know why you'd do that. I have no idea why you would not go up over it, unless you're just not committed to the bull move. But what's, you know, what I guess that would be 100% determined by bulls at this point. Because I feel like bears that know it's going up are going to just be on long for the ride during this motion. So, yeah, looking good. But I don't think it stops. I think it comes way back. I really do. I think it's going to come back and almost double bottom. Maybe make a slightly higher low. That's an opinion, you know. Wait to see. You got to wait until to find out, I guess, what happens when it hits this peak. But come on. This is a heck of a time to hit some slowdown on my Fidelity account. I'm telling you guys. I bought some really short-term some really short-term call options just for this pop. I'm going to get them. I'm going to get 30% to 40% on them because I'm committed. And then I'm going to do it again when we hit low. When did you buy, Booksy? Right here. Why didn't you tell us? I don't know, because I was talking. I'm sorry. And also, I'm not a big like, hey, I'm trading. You should watch me do this. Ha 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 ha. I don't care. I mean, do what you want to do, you know. I bought in there. I'll tell you what the numbers are in a second because I think my order is gonna finish. And then there's a Tesla order as well. All right, are we going? Are we going? Are we going? Come on. Yeah, let's get over it. That's a high of 532. So I think we got it. All right. I'm not going to get the order in, am I? I better get that fulfilled. Jeez. You bought Tesla contracts too. Yes, I did. Bought 7 of them. And then I'm going to do the same kind of thing. And maybe I'll get lucky here and get out in time. But it looks like I might miss it a little bit. These are actually really low. Tesla's like way lower than I expected. It didn't even try to get over that bump. Come on. I wonder what it's hung up on. This guy, really? That should be like a halfway point. Yeah. Well, maybe it truncates because, or maybe SPY gets a second leg here and pushes really high. I mean, it could go up pretty far. It could bleed up pretty far here. But it came high enough, I guess. The second one is, let's see where that second one is. So that's 533.35. I mean, definitely push the first, so maybe it's going to go to the second. And what we'll see is that backup reduces I don't know. You could just back up a bit and then head up again and punch the second. But technically, it's a checkbox again. That's a bull checkbox. It's advanced. We did it! Yay! Hey, everybody, yay! This is so silly, dude. You know what? If Tesla doesn't go up again, I'm just gonna hold on to those because there's not really much there. It's like a 5% gain. I'm really feeling that. So I want it to go above this price. And I guess if it didn't, I might be a little bit bearish because I would really want to see it come above here. I'm going to sell it like 249.19. I bought at the same time. So if you're wondering when I bought those other ones, sorry, I didn't tell you. Why not? Was talking about it. Still said it out loud. I just didn't. I bought like right here. I wasn't sure it was going to break out. It was a little early. There they go. Yeah! I made some money today. Woo! Sweet, man. Sweet. Yeah, this might go for the second marker, so we'll see. It'd be cool if it did. I'm going to leave it on there. I already got out of the short-term ones. I'm not really worried about those. Really short-term ones, you know. I might even trade out of the others that I got if they get high enough, because I'm like thinking that I want to re-enter and get a better position if and when this pulls back. And I think it will, so I'm not like worried about it. The market's rallying. Somebody said something. We got to have a reason, guys. Quick, somebody go find the news. The Onion News. Donald Trump sends baseball signal on his MAGA hat. Markets rally. Adjusting his MAGA hat, Donald Trump accidentally signals market rallies and then realizes it was an accident. Market dumps. I could write for Onion News. That's the Onion News article right there, man. Ewok music. Ewok outdoor barbecue music. See you later, man. Have a good lunch. I like the Ewok music, the Yub Nub one, the original. Yub Nub. Eat up. Yub Nub. Tomato pachiki. Eat not inu whatever. Yes. My brother and I, when we were little, we like memorized it. I kind of remember most of the yo wah. Eat up. Yo wah. You know what they're saying? Because there's like an Ewok language. They're basically saying like freedom. Essentially like freedom. We got freedom kind of thing. That's like the translation. But then when they did the special edition, they just did another big song. Which is fine. Yeah, that's the other one. But then I remember I really loved Star Wars growing up, and I pretty much have every single song stuck in my head ever. But I realized the one that actually comes out a lot is the celebration song from episode 1. Which, you know, is not the best movie in the franchise, but the episode 1 celebration song is a banger. It's got the Gungans like marching in on their like CGI parade, and they're just and then the guy goes like peace, and he like lifts the ball, and everybody's like yeah, you know, it was amazing. But then there's like creepy moment where like Palpatine's like looking over. That's when like Star Wars used to leave a good taste in your mouth. Anyways, that's when you used to be like, yeah, the only movie in the franchise that makes you feel like kind of like, oh man, at least at first, are those middle movies, and they're supposed to be that way. I mean, they're supposed to be kind of like, oh man, because they're like The Empire Strikes Back and Clone Wars. I don't really love Clone Wars. I think it's kind of terrible, but the movies are meant to make you feel like apprehensive, so you can watch the next one. The new trilogy, every movie made me feel crappy. I mean, the first one's like Han Solo died, and then the second one, Luke died, and then the third one, Leia died. And I'm like, dude, I get that you wanted to just like kill everybody off, but you don't have to do it like one at a time. Maybe they were not going to do Princess Leia, and then Carrie Fisher passed away, sadly. But there really wasn't a lot of like celebration that made me feel good in any of those movies. Just kind of missed it. And I was freaking having like a seizure at the end of whatever that last one was, Rise of Skywalker. Good Lord, that ending. I wanted to slap J.J. Abrams so hard. I could not. I was like, dude, people are going to flip out in the theaters. Like, I was flipping out, and I'm not even epileptic. There's like this scene at the end where Palpatine is fighting them all and fighting the two like lovebirds. And they're doing like weird force tricks with lightsabers and stuff, like sharing lightsabers across space and time. Like that's a thing all of a sudden. And I'm like, what the heck? They could have made that way cooler if they just explained it better starting in the first movie, but whatever. I don't want to get into that. But that flashing, good night, man. I was like going to vomit. I was like, what are you doing? We do not need lightning strikes every 5 milliseconds. It was like lightning. And I'm like, oh my gosh, like might as well just be a strobe light. I don't know if you guys remember that, but that just was awful. It was awful. So by that point, even when you get to the celebration, I'm kind of just like, God, I'm glad it's over. I didn't know how much longer the strobe light was going to go on. So, 4 through 6 and Rogue One. All the others are kind of meh. Yeah, I agree. I think that 1 through 3, though, I was still young enough to enjoy them, so I still enjoyed them. And I'm sure there's people who saw the recent movies that felt the same way. Like they were young enough, they didn't really know any better, so they just enjoy them. I heard a kid. I was so angry. I heard a kid. There was some kid at Halloween. We were doing this like trunk or treat thing with our church, and there was this kid that came up and he was playing like Kylo Ren or something. And I said, "Oh, did you like the movie?" And he said, "Yeah, it was good. I'm glad they killed Luke Skywalker." I was like, "What? Excuse me?" I just kind of like did a double take, and he was like, "Yeah, I'm glad they got rid of him. He was boring." And I was like, "Oh my gosh." That was the extent of that conversation. But I was kind of like, whoa. Is that really how some younger kids feel about Luke? It's because they've turned him into like a grumpy old curmudgeon who hates everybody. And even his own family was not willing to go help them. It's like, come on, dude. I couldn't believe that. I was like, really? I don't know what generation that was. He was pretty little, but I guess it would be my son's age because it was about that yeah, he'd been about that age. But I was like, man, what? So I haven't shown my son all the movies. He's seen 4, 5, 6. He's allowed to watch 4, 5, 6 whenever he wants. We watched 1 and 2. Honestly, they're kind of forgettable. He doesn't really remember them because we'll like talk about it and he'll be like, "Yeah, I don't really know what you're talking about." And I'm like, "Oh, okay." I think that's kind of the way he felt about it, which is interesting. I didn't talk down on him. I just let him see it. I didn't let him watch 3 because Darth Vader kills kids. And it is PG-13. It's the first PG-13 Star Wars movie. I think he could probably handle it, but at this point, it was like a few years ago when we started watching them. I was like, nah, we're not going to do that. I don't want to have that conversation. What's he doing? He's chopping up little children. Jeez. Let's just leave it to the imagination on how evil he is until he's a little older. But yeah, Rogue One is really good. Rogue One's also kind of depressing though. Like everybody dies. Spoiler alert. Which is fine. Like a one-off movie. It's very well made. Cinematography is good. The acting's good. The story's fun enough. It's good enough. I heard they did a lot of redos because it wasn't like Star Warsy enough. They tried to make it more hopeful. Like it was too dark or something the first time they made the movie. They showed it and they were like, we need to put the word hope in the movie more. And then there's a lot of the word hope in the movie. It kind of stands out. But I really like all the actors in it. Donnie Yen, Forrest Whitaker. Like it's just a great cast. The guy that plays Caspian, he got his own show, which is a good show, in my opinion. I mean, not everybody likes it, but I like it. And all that stuff was good. But I liked Rogue One, but I remember I saw it with my dad, and I don't remember why, because we're both adults when we saw it, but I guess I was with him. I just happened to be with him when we got to go see it together. And because we live kind of far apart, but I remember we walked out, and I was like, what did you think? I thought it was really good. And he was like, I don't know. Everybody died. I was like, well, yeah, but they did say that it costs a lot of lives, it costs a lot to get those Death Star plans. He's like, yeah, but it would have been nice to see some of the characters like not die. And I actually thought he kind of had a point. Like it was cool to watch a lot of them sacrifice themselves, I guess. But it would have been nice if like one or two people had like survived. They could have just lived. You didn't have to kill them all. I thought that was a weird critique of the movie, though. I was like, huh. I guess my dad doesn't like it when everybody dies. Oh, whoa, Tesla got there. It really got there. So, yeah, I mean, I liked the whole thing. I'm not being down on it. I'm just saying. Yeah, Tesla got there, man. Whew, look at that. You sure it's going to go down, Booksy? Looks like it's just going to run. Well, that's the nature of it, right? Is that it would look like it's going to run, for sure. The only way Tesla runs right now is if it crosses up this particular ice that you see on the screen. And I'm very doubtful that happens. I'm not saying it couldn't happen, but it'd have to jump over this and then just continue up. And that's a pretty extreme one. And if that's the case, this is the spring, right? Like that's all you're going to get. And I know it's a kind of a misleading thing because you're like, well, you just said that was phase B and it's going to drop again. My assumption is that this is not it. I think it's going to come back down. And I'm going to trade that way because that's what I think. So you trade however you want to trade. I'm going to trade this way. And I got out again. So I got a good trade. 25 cents to 36 cents. That's not bad. 25-cent contracts to 36-cent contracts is 70%. Okay. Maybe not that much, but you know what I mean. This is good. So it's a good trade. I'm happy with that. I'm not going to complain about it. Were they really up that much? Yeah, I guess they were. Well, I'm out of them now, so it doesn't matter. Easy peasy, lemon squeezy. There you go. Booksy can trade too. It does look like it's just going, man. Sorry for making a farting noise, but it does look like it's just going. I think it's going to try. I don't know. To me, this is enough, but I think it could try to get above 534. We said that earlier. And then I think it comes back. And it'll land somewhere around 527, which makes sense. That's where they took off from. I mean, we put that on the chart thinking that would come back down to here, and I said it might go right above it. So I'm going to put it right on that candle, just above that candle. That's, to me, a buy zone. Because this is bullish, bullish. And then Tesla's coming backwards right after the sell. Books he sold. Everybody get out. Get out. GG books. It's 50%. Yeah, I'm an idiot. I did it backwards. I know. That's true. Yeah, the late 70s to mid 80s are there's a lot of great stuff. It's because of the Hollywood revival and the birth of the summer blockbuster. But I would argue that the 90s were in some ways a lot better. Because the things that were set into precedence in the 80s, as great as they were, and how many films that we had that were really fun, almost all of it is like Steven Spielberg, it feels like. And then in the 90s, you get this new wave of directors that are just really putting out really great stuff. Like the movies that people remember from that time, that they're like, I love this movie. I'm like, it kind of amounts to like a few directors. And then there's like a huge resurgence in the 90s of like pretty decent films. And then the advent of some of the earliest CGI stuff, some of it's really bad, but so when they start adding some of that in, like peppered in, I think film gets really good for a bit. 2000s were fine. There's nothing particularly wrong about it. Yeah, and I honestly have trouble remembering 2010 to now. The last 10 to 15 years of film has been so-so. There's been good movies, but I think because of the superhero genre, I think it just took over everything. And that was the end of it. We just had superhero films for like a decade. And that's probably what it's going to be remembered for. But all I remember is like great directors grumbling about Netflix and superhero movies for like 10 years. Because they were like, well, we can't make money unless we're making like a superhero movie, you know? Yeah. And bad Star Wars movies. Yeah, I'm not very good with that, but I'm learning some new stuff. I try to do lessons on options trading every now and then in my free time, just to try to learn something new. There's a lot. There's a lot to learn within the market. There's a lot more than just options, but there's just so much data to like sift through. Anyways, I don't know. Every time we get into talking about movies, I always end up doing my little spiel about the 1960s into 1970s and like the Depression era for the film industry was in that time. And it's like people have good memories of it, but there really were, it was like the lowest production of movies ever. It was like 1963 or 69. I can't remember the number. It was like 1963. And it was, everybody was shuttering their doors. They were losing money. And then I always talk about the same thing. That's why you have Disney World and stuff and Universal tours. So they were trying to make money doing other things. And they blamed it on TV to some degree because people were staying home more. But it is more complicated than that. There's always more than one thing. So, yeah. But TV was a big deal, and they thought it was just gonna, to some degree, they thought, well, this could be it, you know, for movies. And that's why the summer blockbuster was such a big deal. And Jaws is a hugely important film. Even though it's kind of campy, you know, people don't think of it as like some epic masterpiece necessarily. It's not like one you would think like, oh, that's, you know, I'm going to go sit in my art house and watch Jaws. It was really important for film because it rejuvenated the idea of a summer blockbuster and having this kind of big event movie that everybody kind of wants to go see again. And Star Wars was a part of that as well. It was like something new was happening, right, with special effects and with movies, brought people back in. Animation took a little bit longer, but it also starts its renaissance in the late 1980s with a few movies. They had gone like dirt cheap on their animation. They were like copy pasting stuff, and they stopped even hiring ink artists. They just dry copied their prints. So that's why you got scratchy lines in a lot of those movies in the 80s, because they didn't even have an inking artist. It has a cool look to it, but it was purely for cost. And then the 90s have the resurgence. You have The Lion King, which was the number one grossing animated movie of all time for a while. I don't think it was beaten until Frozen. Frozen beat it. And then, like Aladdin and all that other good stuff. Toy Story, 1995, first 3D animated film, like to hit the theaters anyways. Pixar started as a graphics company back in the 80s, and many people don't know this, but Steve Jobs was like a majority owner of it for a while. He eventually got rid of it, but it's weird to think about that. But they were advancing that technology, and also the Pixar computer was used in Lion King, which a lot of people don't know. It's just a fun little tidbit. But that scene in Lion King where the stampede comes down, that was done with the help of Pixar, who at the time, again, was like this graphics group. It was a, I wouldn't say it was avant-garde, but it was kind of like trying to push what you could do with acting and animation in 3D as opposed to just 2D effects. The history of Pixar is really fascinating. They got screwed over until like Ratatouille. They got screwed over by Disney like so much. It was a 50% distribution contract. It was like 50%, which is insane. Which means you only make half the money. And all they're doing is just putting their name behind it. And when they finally brokered a really good deal with Pixar, it was during Ratatouille. And they finally got a better deal, Pixar did. And Disney literally just bought them, like right after that. I don't know what was going through their heads, why they even bothered to make the deal. Because it was like right afterwards, they made this deal where they finally wouldn't have like a 50-50 distribution. And I guess Disney just decided, you know what? This is like a money cow or whatever. We're going to just buy it. And they just bought them. And it was Disney Pixar. But man, they got screwed. It's way more than just money too. They argued about distributing sequels, and they're like, oh, this isn't part of the original deal or something. So they wouldn't like let them do. It was just so strange. So it was like they had to do like separate agreements for like Toy Story 2. They owed like 5 movies or something. I don't know, man. Disney was a beast. Still is. But man, Disney struggled the last 10, 15 years to just kind of grab onto anything particularly good. It's been very difficult. I don't know why they're still doing, it's just got to be just like a cash grab, because I don't know why they're still doing these remakes. I just don't get it. Anyways, sorry guys, I'm just kind of going off. Firefly is really good. Is Spy going to die the rest of the day or pop more? It's probably going to go back down to retest these levels. It may not go below 530. Again, I'm not sure. Like 529, I'm sorry. But it should come back and check. So it'll be some area between 527 and 529. In my opinion. I think it's going to hit a top pretty soon. I said maybe it comes up to 534 was my assessment, and then it may come back down. We really were just waiting to see whether this panned out. But I think it's much the same as what we would expect here on Tesla. It's the same thing. You're kind of walking back. Oh, we're still going to go kind of thing. Maybe. And then eventually you don't. And I don't know for a fact that Tesla can't make a rebound here and just go. It's not impossible, but it has to make a pretty big leap. So if Tesla makes a leap over, let's say, 252, and it can kind of push above there and hold, I would be bullish on it because that's the level it's going to need to hold later. At some point, it needs to hold that marker. But I genuinely think this is like a pump up before you try to sell it back down one last time. And then when you drop it here, you'd want to have if you do that, you want to have like a spring. So, yeah, they're getting a good enough buy-in. It's not the best, but I'm also on like a small time frame. It probably looks a lot less dramatic on a bigger time frame. So yeah, I mean, it broke out. But that's typically what I say is like a cat ear. So we'll see. Well, yeah, but cat ears can cross up and over. Yes, they can. But usually this is going to come back. So I'm going to sort of just stick to my guns on it and say I think this is going to walk back down. Probably for the next couple hours, we'll see what happens. We'll have to make a decision. I would be surprised if Tesla held up and just kept going. But my thought is that it's going to come down low and go for a spring. And the spring in this case doesn't have to be super low, just somewhere beneath like 239 would be ideal. Unless there's some kind of tweet, yeah. Yeah. You guys are funny. I mean, you're not wrong. There's absolutely a possibility that interrupts the market price action, but this looks pretty logical to me. I think if this happened, then I'm just waiting for that walkout. It may very well end the day pretty high, though. I would not be surprised because at least the way this is measured, if it comes all the way down to 236, it could get there with an hour and a half left in the day. So if this does walk back down and it's able to get a second sell down, and I'm saying if, because I'm not 1,000% sure, this crosses up now, it's a different story. Then this looks like foolishness, right? But if it's not really that difficult because it's kind of like a flip. I think it would be like a 50-50 here off the middle. Since this is the intersection, it should be right on the center mark. It'd have to be like right there because that would be the SOS back to the top above the previous thing. But I think my point in saying all that is I don't think that's as likely as going down based on the way this is set up. So that's all I can tell you. My probability is betting on down. So that's why I sold up here. So I think it's going to go back down. When it hits the spring, the levels to watch for a walkout, and it just kind of depends on where it is, but it could have like a nasty final drop. I think it could easily be, the buy-in is kind of like this 241 if it does get down there. I know I'm using a lot of if-then statements, but I think it's appropriate right now. Just like earlier today, I wasn't sure if we'd see this or we'd see this on Tesla or on a SPY. I'm trying to do the same thing right now. It did not get there. Tried, but it hasn't gotten above that top yet. It's struggling. It's made some pretty deep little wicks down here. But I think SPY then backs up, comes down low while the market sells off Tesla down. And then I think about an hour before close, we're going to see a reaction. I think all of the bigger names, for the most part, are going to flip back pretty bullish and strong. And I would not be surprised if we see a pretty big move on the S&P 500 up to like 540. What if it happens now, man? I don't know. I wouldn't be able to predict it because they didn't back up to certain levels as much as I would have expected. This is an early backup, which is kind of nice. So maybe there's not a strong desire to go as low as 526, but you would normally at least come back to 529. I just wouldn't be able to predict it just taking off. I think that would be just out there. Like, man, maybe, but I don't think it'll happen. And then I think later you're going to see a rebound up to this creek probably by the end of the day. And then you'll come back down. And like I was saying, I don't really feel like there was much end that looked very different here today. I would be genuinely surprised if we were anywhere except like around 530 going into Monday. I'd be like, oh, that's different. Because all of the other paths have kind of led to the same spot right here. They're just coming back up to like 530, which is where we are now, which makes sense because the next time you cross up and over, you come back down on top of that. So it makes sense that this is going to be resistance after a bigger jump. So I think we're going to back up. Could be kind of nasty because this came down pretty low. I wouldn't be overly shocked if they did something really weird here, but I'm also just kind of waiting just to see. I don't want to overthink it. Yep. And then I think Tesla walks out, buy-in opportunity after it hits a low at 236. It may be around 238 to 236. I'm going to add an alert down here at like 238.50. Let's just do 239. That way it gets my attention. And if it's down that low, I think it's a really good buy opportunity, personally. You sure you're not missing something, man? Couldn't there be like a distribution in the works? Of course. I mean, we talked about this earlier, but there's this like really low trend off to the side. And I certainly could see an argument that like, well, I think we're going to go up and then drop down to that and hit really low at 223. There's a gap or something down there, right? So really going for that gap fill, and it's super weak. And I mean, maybe there's probably a good reason, you know, to make that argument that you think, oh, it's going to come back down here really low. I don't doubt it, you know, that's a possibility, but at least for now, I wouldn't be so sure because the momentum is still kind of in the favor of bulls at the moment. Based on where we are, we're still kind of keeping and preventing that second squeeze group from getting out. It's hard for me to see this happening on SPY, but then seeing Tesla dump that far, I don't know. It's pretty far. But I guess you never say never, right? Especially with Tesla. It's been kind of a rocky road for this stock for a number of obvious reasons. Yeah, I guess I could see the argument. I'm trying to make it right now. Oh, it's a cat here. It's going to just dump. Well, that's part of the reason why I think you would want to wait for a buy-in here, because there should be a triangulation that works really well in this current setup. And it would be like, I was talking about that blue marker. It's all going to point to the same zone right here. So really the best buy-in is not actually down low. That's just like, oh, you're down there. That's kind of risky because if it hooked to like 242, I guess it could keep going. Just looking at the setup, you could make that argument. But I think that this has already tried to advance pretty early, and then it's coming back down for a spring. So the best setup here would be a jump above all of these with a retest. And then that would be like a retest on like 242.70 if we were down there. And then you'd have to kind of jump the creek. So if I'm right, they'd be setting up like a new creek right now. I think they are right there. We might spread it out a little further, like higher up, something like that. So I think that is pretty solid. I think this would be a really good place for if you're interested in a trade. That to me is like an attractive buy zone right there if it breaks back above that marker. So first it needs to hit like a low, it needs to hit a spring. So between 237.90 and 236.10. Then it would need a rebound up above, hit like 245 and come back to 242.50. Where did SPY hit that high, we think? The wave was like an hour before close. Sorry for clicking my teeth, but I'm starting to wonder now if that does go as high. This is kind of backwards. Well, maybe not. I mean, if that's an hour before close and then it slumps, maybe Tesla just goes back and checks like all these levels again. It's possible. It does like a secondary back test, like another local sort of backup spring thing here. It's possible. It might take all day if that happens, but something like that, and kind of end the day at the same spot without breaking out. I could see this working to kind of confuse some folks too, because it would be difficult to watch it go back down, thinking that it's failed. But it actually may need to do that just to come back and check this level at like 241.35. Because if it gets skipped on the way out, they'll check every single one of these little levels when they're backing up. So there's a lot. There's one here, and then this guy, which would be lower at that time. And then I think that gives you an opportunity. This is a really strange way to craft it because I'm doing something that I don't normally do, which is sort of making, I mean, I do this a lot where I try to like think about where it will be, but I'm actually thinking that this structure looks pretty solid. Like there's not much to interpret. So yeah, I think there's a pump about an hour before close. Maybe it starts a little before then, but then before that point, we probably come low, and then there's another sell down after that for about 30 to 40 minutes. It's probably going to be like a wedge or something silly, and then it'll pop, but it won't give us the move until like Monday. I'm going to leave that. That's my best guess based on, and it's an educated guess. It's an estimation. Based on what I'm seeing here, this is what I think happens. And then on SPY, it's kind of the same. I think we kind of come down low, tumble a little bit, and then, because yeah, I'd already made the weakness. Even if it comes up again now, which it could, it'd still be like, oh, it already pushed low, you know. So you can make that push and then drop. So it doesn't really matter how high it comes at this point. It's already done the push through the trend. But then I think it builds out into about closing, right before close, we go sort of up for an hour. So the hour before the market caps out. I'm going to change this now. We see another pop. I wanted to say it goes up really far, but the more I stare at this, I don't really think it needs to. I think the first place I do the marker was probably right. Because, I mean, like, yeah, in theory, it could come way up here to the top, but it doesn't really have to fill the gap. That's just sort of extraneous. It really would only need to come up to like 539, and then it could back up. That'd be pretty healthy. So maybe two options there. Yeah, and then see they just created like another wave. See that gives me the feeling that's right around that same time. Maybe the thought that we may not breach that bigger creek there. But still, another opportunity potentially to trade if you want to trade from here up on a Friday. It's kind of a weird trade, but I mean, you could do it. That's not bad. I'm feeling pretty good about it right now, so just kind of leave it at that. I think we're in a good spot to take off. Well, I wish you guys the best of luck this weekend. I know that I don't always get to everything every single day. This is strange. AMC, I forgot about AMC. Well, it did come back up again. It's just doing this weird cat ear motion. I'd be curious to see what happens during this drawdown and the next one, since it's not really taken off with it. It looks like a compression that's going to just either plop really hard or pop really hard. So maybe you get a little bit of both. I would like to see it. Just go for it. Just dump and then get it over with. You know? Like, if we're down here, then I'd be happier, I think, than being up high. I know it sounds a little backwards, but that's just the way AMC is. It'd be much better for us to just take that drop. Just a lot more clarity in that. Because then I feel like it's in a good place to rebound. But if it's up high, I'm like, eh. Yeah. All right. GME looking okay. I mean, it hit 26.44. My target was 26.72 by about this time. So does that mean it's over, Booksy? I don't know. I don't think it's over. But, you know, watch the market with the pullbacks. It's much the same. Like, this could tolerate a nice drawdown. It's in a wedge. So in the case of a wedge, you know, it's okay to back up first before you try to go forward. So again, maybe going into the end of the day today, it'd be beneficial to see it kind of draw backwards, you know, and like come back down, maybe double bottom at whatever that previous low was, maybe this one, 24.38 or something like that. I think that would look really good. That to me would give me a little more confidence about a Monday boost as opposed to like kind of ending high in a corner. Not really a fan of that. So anyways, I hope you guys make some money and enjoy the rest of the day. And I will talk to you all on Monday.